Good afternoon. I will call to order this regular meeting of Council of the Municipality of Jasper for June 20th, 2023. We are, as you know, in the third week of National Indigenous History Month, and we are on the eve of National Indigenous Peoples Day, which seems an appropriate time to acknowledge that the municipality of Jasper and Jasper National Park respectfully acknowledge that the municipality of Jasper is located on Treaty 6 and 8 territories and Métis Region 4. These lands are the traditional territory, meeting ground, gathering place, traveling route, and home. The Denza, the Hayawak, Anishinaabe, Secwepemc, Stoney Nakoda, and Métis. Just furthering that, yesterday I had the opportunity to engage in a pipe ceremony hosted by the Stoney Nakoda. They were here to perform that ceremony in advance of the RCMP musical ride, which, due to weather conditions, didn't unfold. But I will take this opportunity to thank the Stoney for still going forward with the pipe ceremony, and to thank and acknowledge all those people who worked so hard to bring the musical ride to Jasper, in particular Jasper Park Chamber of Commerce, Patty Bylaw in particular, and to no small degree, I suppose, Steve Bylaw, who, as he always says, was voluntold, and Sergeant Badesi as well. And full credit to the RCMP members of the musical ride who rode twice in the pouring rain yesterday, once to do a parade route around downtown, and the second time in the Red Surge to parade over to the front of the Alpine Senior Summit Lodge to give residents there an opportunity to see them and take photographs. And there was a huge crowd that showed up. So credit to the residents and their spirit to show up in the driving rain to see that. And unfortunately, we did not have an opportunity to see the performance, but a lot of work was done to give us that opportunity. And thanks to the RCMP for the increase in giving the people some degree of show. That said, councillors, you have today's proposed agenda. Are there any additions, deletions, or other changes to be made to the agenda? If not, may I have a motion, please, to approve the agenda as circulated? Councillor Demoda, thank you. All those in favor? There are none opposed. That is carried. We have 3 sets of minutes for approval today, beginning with the minutes of the Legislative Committee of June 6th, 2023. Are there any errors, omissions, or corrections required to be made to those minutes? If not, may I have a motion, please, perhaps from the chair of that committee? Thank you, Councillor Hall. Motion is the council approve the minutes of the June 6, 2023 Legislative Committee meeting as presented. All in favor? There are none opposed. That's carried. We also have the minutes of the regular meeting of June 6th for approval. Are there any errors, omissions, or corrections required to be made to those minutes? Seeing none, may I have a motion, please? Councillor Wilson, thank you. That council approved the minutes of the June 6th, 2023 regular council meeting as presented. All those in favor? There are none opposed. That is carried. And finally, we have before us for approval the minutes of the Committee of the Whole meeting of June 13th, 2023. Are there any errors, omissions, or corrections required to be made to those minutes? Seeing nothing, I have a motion from Councillor Waxer that council approve the minutes of the June 13, 2023 Committee of the Whole meeting as presented. All those in favor? There are none opposed. That is carried. Agenda item 4, correspondence. We have nothing on our agenda in terms of correspondence. Mr. Gibbon, there is nothing to add at this time. Thank you, Councillor Demota.
Well, at the moment we were approving the agenda, I was going to make a motion to move past 4 hours today. But I didn't want to jump Councillor Long. I won't be able to stay after that anyways, just to let everybody know.
Yes, it may be a long meeting. Dig in. But we can dispose so quickly with agenda item 4 and move to agenda item 5, delegations. And here the real work begins, but welcome Mr. Olliston from the Metrix group with the auditor's presentation for council. I'm not sure whether Mr. Gibbon wanted to do any presentation of the presentation or the presenter.
Your Worship, just while we're setting up the presentation on screen for council and the public, Jeff is here to speak to the municipality's 2022 audited financial statements. As we mentioned to council before, there are some things that are slightly different this year about previous years in relation to information that we need from third parties to be able to complete our audited financial statements. So I encourage you to talk with Jeff about that. I know that he'll speak to that. But administration did want to flag that that's something that we're well aware of, and we've been in discussions with the auditors through that. But other than that issue, which is a bit unique to this year, this is an opportunity for council to get an outside opinion about how the municipality's systems of securely managing tax funds and expenditures are doing. And Jeff will be able to speak to you about all of those items. And after his presentation, a matter of good practice is for a municipal council to go in camera and have time without administration to ask the auditor any additional questions, so the auditor can give their unbiased opinion, which of course Jeff would do as a matter of his professional practice, but be able to do that without administration present. It is just something that we should be doing every time. I hope that will be a very short in-camera session because we don't believe that there's anything there, but for council and the public, that in-camera is a regular practice and should be a regular practice of every auditor's presentation for any organization. And so that's what council you can expect and what the public can expect. And I think with those brief introductory remarks where I skated just long enough to get the presentation on screen, I'm going to hand it over to Jeff.
Awesome, thank you. Thanks for having me here today to present the audited financial statements and our findings in regards to the municipality of Jasper's 2022 audit report. So usually to begin these presentations, I usually like to give a bit of an overview of an audit. So really why we have an audit and the importance of it really is to enhance the degree of confidence of intended users. Those main users being yourselves as council, ratepayers, municipal affairs, province of Alberta, so organizations, individuals with a vested interest in the financial performance of the municipality. This is achieved by us as auditors expressed an opinion. So we give assurance that the numbers are free from material misstatements. So what that means is that's a high level of assurance, but it's not absolute. So we do not audit every transaction that happened during the year. Also, as auditors, we exercise professional judgment and as well as maintain professional skepticism. So a questioning mind, we stay alert to conditions which may indicate possible misstatement. So areas such as cutoff, we want to make sure that transactions have been recorded in the correct period. Revenue is being recognized once performance obligations or services have been rendered, and as well as the collectability of your accounts receivables, or those estimates for an allowance or your receivables deemed to be collectible subsequent to your end. And then also a critical assessment of audit evidence. So has the evidence that we're looking at been altered, or are we looking at valid source documentation or third-party confirmation to confirm balances? So the first couple pages of the financial statements outlines our auditor's report. So on the first page at the top, we're giving an opinion here. We're giving an opinion that the financial statements present fairly in all material respects the financial position, results of operations in accordance with Canadian public sector accounting standards. New to this year is that there is an excerpt for the possible effects of the matter that is described in the basis for qualified opinion. So here in this part of the auditor's report, we have an area here where we are indicating that we are given a qualified opinion on the financial statements. It is still in accordance with Canadian generally accepted auditing standards. However, we have indicated that the proportionate share of the West Yellowhead Regional Waste Management Authority has not been recorded in the accompanying non-consolidated financial statements. So the financial statements presented by Jasper this year are non-consolidated, so they do not contain the 20% ownership of the authority, in which case you are bound, if there's an obligation there to pay, that kind of stuff. So those numbers are not present within the financial statements right now. And we will talk a bit about that later in the audit findings report, but just to note, that's the only difference in the audit report, is that is indicating that is not proportionally consolidated. The next part of the audit report outlines responsibility of management and those charged with governance for the preparation and fair presentation of the financial statements. And then the second part of the auditor's report, the second page, outlines auditor's responsibility for the audit, which in summary indicates our objective, which is to obtain reasonable assurance that the financial statements are free from material misstatement. So after that part there on the financial statements on page, I think 3 or 4, there'll be the statement of financial position. So this is a snapshot of where the municipality was at as at December 31, 2022. You'll see your cash position was down year over year, so down about 3.3 million. This was due to positive cash flow that was generated from operations, about 2 million. And then you had spent about 4.4 million on tangible capital assets, and as well as 900,000 on debt repayments. When it comes to trade and grants in place of taxes receivable, you'll see here a breakdown of the municipality's tax balances here. So you did see a bit of a spike here in your current taxes and grants in place of taxes, so about 100% increase here, up to 474,000 from 242. Your arrears taxes, or anything 1 year and older remains consistent at just over 200,000, leaving you at 685,000 still to be collected subsequent to year end. There is an allowance here for 48,000, and the majority of that is made up of a property. It's indicated for municipal affairs, so it's government of Alberta property there, leaving you with 636,000 to be collected. So when it comes to collectability of receivables, the properties that are on here we deem to still have a strong assessment value. If taxes were to be paid within a certain time period, municipality would take that over. We feel would be able to recover the tax portion there on the sale of the property. So again, feel your allowance is adequate at your end for what you have there as receivables owing. The next slide here are your other receivables. So receivables from other governments. So this is really made up of various grants. So 4.4 million, about 2.5 million of MSI, 680,000 for ICIP funding, 812 for the Canada Community Building Fund, and 278,000 for ID12 payments. When it comes to trade accounts receivable, that was up to 2 million from 1.4, partially due to additional utility receivables being owed subsequent to year end there. GST of 300, leaving you with 6.8 million in receivables to be collected there. An allowance for doubtful account of 345, netting you 6.4 million to be collected, or a $2.5 million increase from prior year. Back to the statement of financial position, the other big increase here on the asset side is your debt recoverable or local improvements. So here you had a new Connaught local improvement here, about $5.3 million. So that gets recognized in the year that it is levied. So that's why you see an increase there in the receivable. So as this amount is collected over the years through the tax roll, the principal portion there will be reduced, and then the interest that matches the debenture interest paid by the municipality will go against revenues and expenses there. So you'll see this start to dwindle down over time, again, as it's repaid through the taxes there. So I left you with total financial assets at year end of 29.5 million, up from prior year's 24.7 or $4.7 million increase. The next part of the statement of financial position are your liabilities. So what the municipality owes subsequent to year end. So accounts payable and accrued liabilities, just under 3 million. About 2 million of that is general trade payables, about 418,000 for holdbacks. 323,000 owed to other governments, 188,000 in wages, and 23,000 interest make up that balance there. When it comes to employee benefit obligations, you did see a spike here up to 677 from 500, mainly in relation to additional vacation owed to employees at year end. Other liabilities, deposit liabilities of 68,000, and then your deferred revenue. So deferred revenue is made up of various grants that the municipality has collected, but still are required to spend in future years for programs. So your other deferred revenue and grants at the top here start the year at 561,000. This is mainly made up of FCSS granting here, so 221,000 of additions, 422,000 spent, still 362 to be spent. Other changes or significant items, MSI capital, you started the year at 5.9 million, your $736,000 allocation for 2022. You had recognized revenue there of 634, so various projects such as the Jasper Recreation Complex rental was where that money was used, leaving you with about 6 million still to be spent at MSI capital funding going forward. Your Canada Community Building Fund, your allocation of 276,000, so 1.6 still to spend. And then municipal stimulus program, you had spent the majority of that money still left the year, about 350,000 there on sewer sanitary RV disposal, as well as bulk loading water stations. So those funds were allocated to those projects. So that left the municipality still with about 9 million to spend on its grant funding going forward. We go back to the statement of financial position after that. You have a new capital lease obligation here. This was for fitness equipment, about 52,000, and then long-term debt of 11 million. So long-term debt is made up of various debentures ranging in interest rates from about 2.5 up to 4.8%. You had no new debt issued in the year. Total repaid amount of 956,000. And then interest paid in the year of 377 when it comes to your long-term debt. When it comes to debt limits, under the Municipal Government Act, you have certain debt limits. So your total debt limit is made up of 1.5 times your total revenues. So almost 40 million there. You have total debt of 11 million, leaving you with an unused limit of 28.5 million. When it comes to service on your debt limit, 6.6 million. So how much can be repaid annually? Your service on your debt was only $1 million for next year, leaving you with 5.5 million left of debt you limit unused. So you're still well within your debt limits and the Municipal Government Act's requirements there. So we have to look at long-term debt. Total liabilities total 23.7, so down from prior year, 1.4 million of 25 million there. And if you were to take your A, your total financial assets, less B, your total liabilities, you'd be left with a net financial asset position of positive about 5.7 million versus prior year's net debt position of 376. If you were to back out the local improvement, total amount that you obtain in your financial asset sections of almost 5.3 million there, you'd still be in a $400,000 positive position. So you definitely have shifted from a net debt position to a net financial asset position, which means that you have sufficient financial assets if you take your cash, collect your receivables to pay off your obligations and still be left with an amount of money in your bank accounts. So after looking at net financial assets, the next item on your financial statement here are non-financial assets. So tangible capital assets makes up the bulk of that, so just over 65 million. So this is made up of various categories in the year. So you'll see your additions for the year of total of 4.4 million. Some larger items, 1.3 million spent on the ice plant, about 700,000 on your wastewater treatment plant upgrades, 400,000 on sanitary dump station rehabilitation, as well as the purchase of a new loader. So that made up some of the various additions in there. And then you'll see your amortization expense, which is at 2.7 million. And this represents your usage of your assets. So as you buy such items as a loader, they're expected to last 5 years. Other items last 10, 20, 30 years. Every year when you use those assets, percentage of that goes into your operations through amortization. So that amount represents the usage of those assets through the life of their period, as opposed to expensing the entire amount in the year in which they're purchased. You'll see there's a large transfer this year, 5.9 million for construction of projects, engineering structures. That's in relation to the Jasper Canaan offsite services. And that left the municipality with an ending net book value of 65.1 million versus 63.4. Also, what this kind of shows you from an accounting perspective is that with the additions of 4.4 and the amortization of 2.7, it shows that you are replacing and then adding to your tangible capital assets. sometimes you'll see, you know, you could potentially have amortization, say 7 million in additions at 4. If you were to carry that out for multiple years, it would mean that your assets are probably depreciating quicker than you're renewing them. So in a sense, you're, you know, in this case, you kind of added to your net book value and sort of replaced assets in there or added to it with extended useful life. So it's not a, you know, correct science. Obviously, engineers would have a different opinion on stuff when they're looking at actuals, but from an accounting perspective, it's just a quick way to kind of see that, hey, we kind of are putting money back into our tangible capital assets, as opposed to just using it all the time and then not replacing it. So your other non-financial assets here, prepaid expenses of just under 400,000. Left you with total non-financial assets of 65.5, or a $1.7 million increase year over year. And then we look at the municipality's accumulated surplus. So if you take your total non-financial assets, add your non-financial assets D, you end up with an accumulated surplus of 71.3 million, or about a $7.8 million increase year over year from 63.5. So your accumulated surplus is broken out to a few categories here. At the top, unrestricted, 3.2 million versus 4.6. You did see a $1.4 million decrease there. When it came to operating, again, you have some new kind of shift here in your reserves. So financial stabilization of 1.6 million, leasing of 29,000 left you at 1.6. It was a $1.7 million decrease there in your operating reserves. And then when it comes to capital, an increase here up to 7 million from 4 million. So the 1.4 and the 1.7 and 1.4 from restricted, unrestricted really just shifted into your capital reserve. So it's kind of a net effect from operating into capital. And then you'll see your equity and tangible capital assets. And this is where you see the $7.8 million surplus change. Is really, it's all tied up in your assets when it comes to your local improvement tax, as well as your grant money recognized on those purchases. So that makes up the effective change in your accumulated surplus. It's not actually a cash uptick. It's more of a decrease in your tangible capital assets. So you can see the change there up to 59.4 million from 51.5, or $7.8 million change, which is exactly what your surplus is for the year, which we'll talk about later, or based on Canadian public sector accounting standards. So that's a snapshot of your balance sheet. So the next part here, I'll start with your revenues, which is on your statement of operations, or should be page 5 of your financial statements. And so your total revenues for the year up to 26.4 from 17.6. Net municipal property taxes saw an increase there to 13.5 from 7.4. Again, that whole contains 5.3 million of the local improvement tax that was levied in the year. So that's where you see the total amount come into play, as well as a $700,000 increase due to increase in assessment and rates from prior year. User fees and sales of goods are up to 7.2 from 6 million. As is in line with your utility fees, so you saw additional fees related to capital costs and connection fees. So you saw an increase there in user fees. Government transfers for operating, so grants that are used to fund operating expenses of 2.5 million. Fines, licenses, and permits up to 900,000 from 300. In relation to parking fine revenue there, as prior year was a pilot project and this year was a full year. Franchising concession contracts, that was up to as well, 659 from 437. With utility costs increasing there, you're seeing an increase in the franchising costs. So that's consistent across the board with other municipalities. With the arena and activity centers and rentals, you're seeing an increase there up to 500,400. And then investment income. So obviously, increase in rates are driving an increase in cost, but when you have some cash in the bank and you're able to get increased rates there, you're able to earn additional investment income. So you saw a spike here up to 400,000 from 114. Again, pretty consistent with other municipalities across the province that we audit. Penalties and costs on taxes saw an increase here up to 300 from 111. This is in line with the increase you saw in your taxes in the first few slides there in your current portion, almost doubling up to 500,000 from 250 in the prior year. And then other revenue of 281. So again, the municipality ended up with additional 8.8 million in revenue year over year, about 50% increase. If you back out the local improvement tax amount there, 5.3%, and that's to about a 20% increase year over year. When you compare to budget, It's a $5.7 million increase from budget, about 28%. If you back up the local improvement tax, it's just over 2.4%. So more in line with what you're budgeting once the local improvement tax is taken out of there. The next part here is just kind of a pie chart, shows you the allocations of your revenue. So net municipal tax is making up 51%. Last year was 41%. Again, that 10% change really in line with the local improvement tax revenue of $5.3 million. User fees, 27%, and prior year they actually made up 34%. But again, that'll change back with the change in the municipal taxes for next year, and as well as government transfer operating down to 10% from 16%. Where you do see some increases here, licenses making up 4% versus 2%, and as well as investment income up to 2 versus 1. So again, with the increased rates, you know, this is only in relation to really Q4. I'm sure in 2023 you're going to see even more investment income from your operations here. The next slide here. So in expenses by function without amortization. So there you go. There you see 4 point. What? I don't think Danny updated this. Okay, at 4.7 million versus 5.3. So prior year you had more repairs and maintenance, valve replacement, and hydraulic modeling when it comes to utilities. So that's why you're seeing a decrease year over year there. When it comes to parks and recreation, 3.9 versus 3.9, so consistent there. Public health, you saw an increase in wages or full-time equivalency there when it comes to staffing, so up to 3.5 and 3 million. General government there, you're up to 2.2 from 1.6. Again, increase in wages there and full-time equivalency, filling vacant positions, as well as a little more repairs and maintenance. When it comes to protective services, a slight decrease here. In 2022, you actually had less money spent on fire mitigation that you needed in 2022, just on the year we had there. And then legislative, you see an increase in legislative in conjunction with a decrease in library and museum, as there was previously there were transfers into that account that have been reallocated up to legislative. So that left the municipality at 20.4 million, which is a slight increase, about 270,000 year over year, 13%. And then as well, compared to budget, let's set 570,000 or 2.9% there. Expenses by function, everything was in line with what she had budgeted for, except for repairs, roads, streets, walks, and lighting. There were some roads that were in capital that were expensed as they were deemed to be repairs. So that's why you see the jump there, but everything else either in line or below budget. When it comes to expenses by object, so again, salaries, wages, and benefits up to 9.5 million. However, you had budgeted 9.4, up from prior year's 8.6. So again, filling positions there. Contract and general services down to 4.2 from 5.5. That's in relation to the wastewater treatment repairs from the prior year. Materials, goods, and supplies up to 3.2 million. Increase really in utility costs there. Amortization of 2.7 million. Interest on long-term debt was up to 380 from 196. And last year you had the new debenture when it came to the local improvement taxes there. Transfers to other individual organizations up to 149, leaving you again with total expenses of 20 million, about $270,000 increase, and then a $570,000 increase compared to the budget. So after taking total revenues less expenses, you end up with a $5.9 million operating surplus. You added other income or government transfers that were used for capital of 1.8. Items there, 642,000 for ISIP grant there, 634 of MSI money, and 350,000 of MSP money. Gives you the annual surplus of about 7.8 million, which is the exact change in that equity and TCA account. So again, really in regards to the 5.3 million for local improvement tax, and then the additional amounts for the amortized or the grant funding being recognized. You'll note here below this, there's a restatement. So previously we had consolidated the Yellowhead landfill due to the inability to kind of get information for this year. We had to pull it out from last year, and then as well not presented this year. So the comparisons don't show it at all. So it's not like it was in there last year, not in there this year. It's not in there for both years. So now That really removed additional accumulated surplus of about 1.7 million, which then adjusted your opening beginning surplus to be 63.4 million versus 65.2. And then you end the year at 71.3 million, your accumulated surplus due to your $7.8 million annual surplus for the year. So when you set up your budget, you're like, well, we're budgeting for a zero amount. So this is kind of what you see here on the left. So the financial statements are presented in accordance with Canadian public sector accounting standards. Whereas, in your budget municipality, you're kind of budgeting on a cash basis, how much cash is coming in, how much cash is being spent. So this kind of gives you a breakdown of how that the budget portrayed to the actuals. So amortization, for example, is not a budgeted item, so that gets added back at 2.7 million. Net transfers from reserve, you had budgeted about 16 million there, actual was 1 million. Issue of some long-term debt, 956,000, I should say repayment of long-term debt there. So that's a total of 2.8 million get it added back. And then principal repayment of long-term debt. So those two kind of offset there with 956,000. Acquisition of tangible capital assets of 4.4 million. And again, leaves you with results of operations as budgeted about 5.3 million, which is in line with your local improvement tax levy. So you kind of worked your way. So although it shows 7.8 million, you're actually in line with what you were initially trying to budget for, which was a zero amount once that's taken out. So in summary, you ended the year with an annual surplus in accordance with Canadian public sector accounting standards of 7.8 million. Net financial assets are at 5.7 million. So again, you're in a positive financial asset position versus the debt position of the prior year. So you have sufficient assets to meet your obligations. We have an audit findings report that I'll present. So just in summary there, discussion of the qualification of the audit report. We have no significant control deficiencies, no unusual accounting policies or estimates. We have some unreported misstatements. And then in regards to significant and difficult, we didn't have any significant difficulties, just more in line with, again, the consolidation of the other entity. So just wanted to thank Natasha and her team, Bill, for all the support and helping us to get the audit done. I know it's a bit of a challenge when we're trying to rely on others for some information there. And I guess if anybody has any questions on anything at this time, I can take it now before I jump into the other part of my presentation.
Thank you for that, Mr. Elliston, and thanks to staff for getting you to this point. I appreciate your acknowledgement of their work, and it's complex stuff, so we're happy to leave it to the experts in the field. I will open the matter and the presentation to questions from councillors, remembering the remarks from Mr. Given earlier in the day that there might be some questions that could be addressed later in camera, but if you have questions for Jeff now, this is the time to do so. Councillor DeMona.
I have a few highlights here throughout the document, but I'll try to take my turn just to keep it relevant to the conversation. I guess it would be for us, it would be page 15 of our document, council document. Understatement of financial position. The first one, there's a capital lease obligations for almost $52,000 there. Although not a huge amount compared to everything else, I was just wondering what that resembled or what it.
That pertains to fitness equipment for a facility there. So you have a lease agreement with someone, you just pay them over time. So at the end of the lease agreement, it would be deemed that you probably pay out the remaining amount. Usually it's either $1 or nominal amount, and then you would keep the equipment. So from an accounting standpoint, we just report that as a capital lease obligation versus say an operating lease obligation where you're say paying rent, but you're not going to own the building after, right? So that's just the difference in the accounting treatment there.
Appreciate that, and sorry for making you repeat yourself. I know that you said that. It's just, I'm not saying you're going fast, but for me, it's hard to keep up with.
Yeah, no worries.
With people to start with.
while others think of their questions, I had a couple. For receivables, this is a snapshot as of December 31st, 2022. Is that correct? So at that time, you have indicated that current taxes and grants in place of taxes have receivables of $474,000. So almost double from where we were a year previous.
Yep.
You did speak to that, but should that be alarming to us? Despite the fact that we may have security, does it tell us anything else that we should worry about?
You know, hard to say. I think from your, from your perspective as a municipality, with these properties that say are a year behind in their taxes, we as an auditors, we're looking to look at the assessment value of these properties, look at where they are. Is it a tangible assessment too? So is it an actual, structure that is deemed that, taxes are never paid for? Would you be able to sell it to, a third party in order to collect your taxes? We would think so. Where they could, because you're an urban, it is a little, it is a little easier for you to recover your money when there is some tax issue. But where we see an issue is in the rural counties, where you have organized or companies on, typically on farmland, trying to, create revenues, and then they're unable to get anything, and then they just leave. So that property is worth a lot when you have machine equipment on it and you're doing work, but it's not worth anything when you leave. So this case is a little different. I think your properties, for the most part, there are okay. Honestly, it's a bit alarming to see a bit of a spike there. When we perform our audit work, looking at assessment, we're looking at subsequent, collection of any of these tax amounts too. So, we feel that, the amount there is, there's not a required allowance or increased allowance in regards to that, but definitely something to be mindful of going forward, as you don't want to be per se budgeting to, collect X amount of money in taxes, and you're planning to spend all of it, but then you're short actually collecting the cash, right? So in this case, your case, it shouldn't be an extreme situation, but I've definitely seen that with other municipalities where they're shorted quite a bit of money, and you kind of end up in a cash problem going forward. But yeah, those would just be my additional comments, I guess.
Thank you. I appreciate that. Go ahead, Councillor.
Well, while we're on the same page and talking about that, the allowance for doubtful accounts, is that through you, your worship, to maybe administration, and is that an accumulation of residents and businesses, or is that more on the commercial side of doubtful accounts, and is that particular one entity? Or
I would say I think about 30,000 is related to the government of Alberta property. Majority of it is, yeah. I think the taxes were written off last year or a motion too, so that would make the bulk of that.
And then there's like another 100,000.
Well, the allowance is only 48,000.
Oh, sorry. Okay, right. I apologize. Yeah.
Councillor Wilson.
Just out of interest in operating revenue, we can refer to say like the pie chart or the slide previous, but for an item like paid parking, would that fall under what title would that fall under?
Like if the municipality is paying for parking, or even your parking
revenue,
like fine revenue, it'd be under your fines.
It'd be under fines,
licenses and permits, yeah.
Fines, but which doesn't indicate the amount, I guess, suggesting that we would have increased from year to year.
Oh, in regards to your parking revenue?
Well, I guess this is 2 years, yeah.
Yeah, so the bulk of the change is actually from that. I don't know the exact amounts year over year, but that's what.
But that would have been in fines, licenses, and permits.
Yeah, so the prior year, I think it was a pilot program. There wasn't much in there, and then that was the full year this year. So that's actually why you see the spike in that. So
right, and then previous year we even see a larger spike because it was either zero or we just started the project.
Exactly.
Yeah, because we haven't even.
This is like the first full year.
Yeah.
Okay. What I recall, I think. User. Oh, the user. Okay. Yeah, I think it's a fine. I could take a look at that. I think it's no fines, but yeah.
Councillor Melnick.
Thank you, Your Worship. Through you, Mr. Allison, on the page prior to the one that we just referenced with the operating revenue, we see the category under capital under fixed assets of 5.2 million. And then in 2021, a variety of other categories where there are no numbers in 2022. Can you explain, is that a transfer of all of those different categories to the fixed asset account? Because there was no dollar amount in 2021 for fixed assets.
That's in regards to the accumulated surplus of reserves, correct? That's what you're looking at? Yeah, so yeah, that was just the consolidation of the categories in the prior year into one, and then also transferring additional funds from unrestricted and then your general and restricted surplus into the fixed asset category. So kind of having one general for you to probably pull from to identify specific projects for that versus by a department-based approach there. Which is actually becoming more common too. You know, there's a couple, you know, like some municipalities, they've got, 20 or 30 different accounts because it's all departmental and money here and there. Other ones you're seeing just one account where one restricted, and then you're kind of determining as a whole what you're kind of going to do with that money versus saying it was, surplus in this department, so it goes there versus surplus in that. So definitely, I think there's definitely a shift into having less and kind of making decisions going forward that way versus that maybe how it was done previously.
Go ahead, Councillor Miller.
Thank you, Your Worship. And just to confirm, the 2021 balance in utility capital, 634,451, and now we're at 1.2 million. That would be the result of the capital component of our utility collections, of our utility billings.
I'm assuming so that whatever your either surplus is for utility as a whole, or the capital portion that's not being spent versus what is being spent, that would be the net change going into there. Yeah. So in your budget, you may have approved to spend some money out of utility reserve or not, or the additional not going in there would be from the additional taxation to have replacement of utilities going forward.
So, in our decision to have utility fees, we assigned about 400,000, 380,000 capital amount to go into the capital fund from the utility bills, and here we've got approximately 300,000 more. Is that because we had planned to spend money and didn't? I'm just trying to reconcile with what we charge our tax component and this particular item, or if we had other grants come in.
We have to leave that for administration to answer that question specifically, but yeah, usually, with the utility reserve, it should be a budget amount to go in, and then if there was additional surplus, that would get added in there, and then net any approvals to spend money on utilities and capital from that fund versus a grant. But if it was a grant, it would be recognized on your statement of operations through your government transfers for capital. So this would be deemed money that you would have collected within your operations, not grant money that would have been the change. But the actual change, I'm going to leave that to administration to answer.
I didn't need a point of clarity here, just for our fellow councillor here. Just for everybody else, because I saw people scrolling back and forth. We are on page 6 of what's where Councillor Audited is referring to. I apologize. I want to get some clarification on your numbers, and you referred to the 1.2 million on utilities capital, and you were talking about budgeting for a $400,000 revenue for that capital, and then we have $300,000 more, and I just wanted to know how you broke that down.
I'm using round figures, but when we decided on the 3C, the consumption capital, and connection, thank you. A portion of that billing to our residents was going to be dedicated in both water and sewer to the utilities, and this may be the combination of both water and sewer. My recollection is that it was under 400,000 that we'd be collecting to go into the capital reserve, and the capital reserve has changed by 600,000, and that's where my question is.
Okay, good. Yep. Thank you. I appreciate that. I just need to follow that.
Your worship, go ahead.
Thank you. Your worship, through to Councillor Melnick. So with the utilities, there was water, sewer, and garbage and recycling. So there's amounts allocated from all of those sub departments, which would bring that amount up further. We were talking specifically mostly about water and sewer when we were having our conversations around the billing model and how it would collect more. It was collecting definitely more year over year. So we're talking about how much more it would increase from a prior year. I would have to bring up the exact transfers in, which I've done. I just don't have them up at this moment. But that is why you see that amount. And if we can definitely go over that transfer to reserves again as well. But that is what occurred, is that year transition of increasing those amounts, but it also included the amounts that would have been transferred to reserve in prior years as well. We were talking about the increase. So it wouldn't have just been that amount, it would have been also the amount, it would have been the amount on top of the amount that we would have been collecting before.
Thank you for that. It's something I think for us to bear in mind when we're looking at budgeting for 2024 at utilities and how we're transferring to reserves. But I thank you very much for the explanations, both Director Melanchuk and Mr. Elliston, and Your Worship, all yours.
Thank you. Councillor Keller-Henry.
Thank you, Mayor. The next question on page 27, penalty costs on taxes. So we had 306, 177, 21, we had 111, and we budgeted 84. Is that just on our taxes we're collecting that? Just pure
yeah,
taxes?
it's just on the taxes. So because you saw the increase in your current taxes up to that one changed by went up to 474 versus 242, you're almost seeing, you know, just in regards to that, just as that year end, you're seeing a double percentage of tax penalties allocated year over year, which the amount during the year could have actually been higher and then could have been paid down before December 31st. But that's why you're seeing the spike increase there in the penalties on taxes.
Is this alarming or this normal?
Well, we kind of talked about that. It's, I don't know, it's almost maybe a wait and see kind of thing with the individuals that or the organizations that are paying the taxes. I would be more concerned if it was in the arrears. It's in the current tax, so it did happen in 2022. So whereas the arrears is 1 year and longer, so it's not like they haven't paid in 5 years, haven't paid in 3 years. We're talking about 1 year, so definitely, you know, they get their taxes paid and get this year's paid, there's nothing to worry about. So I'd be more concerned about the arrears side than anything. But you know, the current side obviously seeing a spike is just, you know, be mindful of it going forward and hoping that you can collect that, and also ensuring that the properties that are assigned to those roles actually have value or security if they ever needed. Yeah.
Thank you.
Yeah.
I have 2 questions left.
And
I can refer councillors to page 22 of the electronic agenda. Debt limits is the issue, and I wonder whether you can enlighten me as to the large increase in our total debt limit. So I know when you presented, you said 1.5 times expenses to calculate debt limit. So for 2022, that 39 million would be 1.5 times 26. In the previous year, the 26 million debt limit would be 1.5 times 17 roughly. So what accounts for that large increase. I mean, we have reduced our debt by about $1 million, but we've increased our debt limit by 14 million.
Yes, your debt limit is driven by your operating revenues. So how much, money you're either taxing or you collect on user fees, operating grants, penalties that you're using to fund the operations for the year. So with the local improvement tax, 5.3 million, recognizing the taxes, that causes your debt limits to see that huge increase. As well, your utility fees increasing, the paid parking, those type of things. So there's other areas where you've increased in revenues, smaller amounts, but obviously the 5.3 million local improvement tax won't be there next year unless you have a local improvement tax coming, but that won't be the next year, and that'll cause a change then in your debt limits once that goes away. But for financial statement reporting, we're required to report based on those the 1.5 times operating revenue, then the servicing at 0.25 times your operating revenue. So kind of required to show those amounts, but yeah, that'll definitely decrease for next year. So it's not that you have more money that you can borrow, because you're not going to maintain that same operating revenue amount going forward.
Right, I appreciate that explanation. And then for some other municipality, not of course Jasper, but if you happen to borrow heavily on a year like this, the next year you might be well in excess of your debt limit.
You could, yeah. Then you would need special approval for municipal affairs. So, I've never had I shouldn't say that. I've had municipalities be over their limit before, usually small amounts. I've had organizations that get, special treatment right off the start because they're just taking on debt right to begin with just to get going. So those usually get approved pretty good, but I haven't had one where they've, gone over, specifically, I guess, and ask for forgiveness later. But yeah, that you would get special approval, hopefully.
All right, thank you. I see Mr. Gibbon wanted to respond as well, but I think we should not go to the bank on the assumption that we have $28.5 million of borrowing room.
Well, Your Worship, you wouldn't be the only municipality that has received special permission. That I think Wood Buffalo has specifically received that in the past when they had built a new water treatment plant. The province specifically gave them actually a different factor rather than the 1.5 times revenue. They used some different modifiers there. What I did want to speak to actually was on this point, Your Worship. I wanted to acknowledge where I misspoke at our last meeting. This $39 million was a matter of some discussion around the activity center renovation and our borrowing capacity. I just wanted to acknowledge my error in speaking off the audited financial statements off the cuff in an effort to respond. That level of detail I didn't have at hand. And so just exactly right, that $39 million shows this year. So that was accurate, that was correct. But was it exactly right to demonstrate that that would be on an ongoing basis? And the fact is no, because our revenue appears inflated because we booked the next 20 years of local improvement payments to us all in 1 year because of the way that we have to handle it with the public sector accounting standards. So we've basically pre-booked 20 years of revenue all into this 1 year, and that's why it inflates it and will again recede next year, as Jeff said. So I just wanted to acknowledge that because this was something that we discussed in our last council.
Thank you for that, Councillor Demona.
So yeah, like when we were listening to that, I actually wrote that down for in camera later. So I appreciate you being that transparent. On that note, I think it's good for us to ask the questions, and we have a little bit of experience now, though, when when we're talking about our debt limit, is to factor out some of those other things that might not be relevant for upcoming years. So I think that was really good exercise. But as far as that 5.3 million, is that all based on the activity center reno, or like where's the bulk of that 5.3? Again, like I don't understand it, and I just want some clarity.
Sure. So the $5.3 million is the Connaught local improvement levy. So where we provided utility servicing to the Lonsalong Connaught, we borrowed money and we passed a local improvement levy bylaw that requires the owners of those properties to pay us back over the course of 20 years, I believe, but 30 years. And so we will get payments of however much per year for the next 30 years. That's what will actually happen in terms of when somebody's going to send us a check each year for the next 30 years. for the treatment in our financial statements, all of that 30 years of revenue is front-ended into 2022.
So we have paid for it, we haven't collected for it yet.
Yes.
Right, correct.
Yeah.
Sorry, Sam, thanks.
If there are no further questions at this time, I would invite you, you had more to get into, I think.
I was just going to mention that. So with that local improvement tax that come on, the venture here is the $6 million one here in relation to that. So there's 5.3 million of a principal portion to be collected, and then as you collect the taxes, you collect the principal plus like an interest component, which is your interest rate that you took when you borrowed the money, and then you'll see that dwindle down on the debt side to zero, and then you'll collect the interest income of 800,000, and then the 5.3 million in regards to the principal portion of the local improvement. So it ends up not costing the municipality, I guess, anything except for administration work involved in trying to provide that local improvement.
Thank you for that.
All right, I'll get started on the next part then of the presentation, which is our audit findings report. So this is kind of more of the qualitative aspect of what we're doing as auditors here. So the first page here, the table of contents. If you ever to get a hold of me, phone or email, my contact information is here, as well as Danny On, who is the senior manager on the file. When it comes to the first part of the report, the executive summary, really the purpose of this report is to promote effective two-way communication between ourselves and the auditors and yourselves as councillors. When it comes to independence, we feel that we are independent of the municipality, so we don't have a financial interest or an economic dependence on the municipality. In order to finalize our audit today, we'll obtain our updated legal letter response. We'll complete our subsequent event procedures. We'll obtain signed management representation letter. We'll complete our required communication at council, which is what we're doing here right now with the presentation. And then we'll obtain evidence that council approval of the financial statements. Once we receive all those, we'll be able to issue signed audited financial statements. When it comes to changes from our audit findings towards our audit plan, there was no changes from our plan in regards to our findings. When it comes to responsibilities, so here, just a note here, I talked about this beginning of the presentation, but just that our audit of the municipality's financial statements was performed in accordance with Canadian generally accepted auditing standards, and that the financial statements present fairly in all material respects the financial position of the municipality in accordance with Canadian public sector accounting standards. When it comes to responsibility and management, those charged with governance, just to note here that those charged with governance council is responsible for overseeing the municipality's financial reporting process. The next part of the report, materiality. So you hear this word brought up lots with auditors, and really what that, for materiality, we used 4% of operating revenue, which is about 800,000. So what that means is that we feel that if revenues were to increase or decrease by 800,000, or say expenses in the same line, we feel that a user of the financial statement may have a different view of the financial performance or outlook of the municipality. So those users, again, yourselves as councillors, province of Alberta, municipal affairs, organizations and individuals with vested interest in the financial performance of the municipality. So again, this is based on professional judgment, but that kind of gives you an idea of where, you know, your opinion might change on the performance of the municipality for the year. The next part of this report, we outline our audit results here. So our first main area of focus that we noted from our audit plan in regards to our findings here is management override of control. So management's in a unique position here to potentially perpetrate financial statement fraud through the manipulation of accounting records. So what that means is there could be adjustments being made to say conform to budget, to conform to approved, you know, to change, say, transfers for intended reasons. So what we do is we use data analytic tools that identify journal entries that exhibit these kind of characteristics, and then we then test those entries to make sure that they are valid, appropriate entries that should be made. So in doing so, we had no significant findings to be noted to council. Other areas of focus, revenue recognition here. So here we want to make sure that revenue is being recognized once performance obligations have been met. So in our response here, we're updating our understanding of process and controls. We are reviewing all of your agreements, source documents. So we had no significant findings to be identified. And we do have some other matters that we'll note to management in our management letter. When it comes to net municipal property taxes, risk here from an audit standpoint is that you haven't, your taxes are not based on your actually approved tax rates or potentially your assessment value at year end. So we do obtain a third-party evidence of the assessment, recalculate your tax revenue based on your approved rates, and then as well as recalculate your over under levy. So we had no findings in that area as well. When it comes to user fees and sales of goods, potential risk here is that you're charging the incorrect rate that's been approved by council here. So again, we update our understanding of process controls. We perform substantive analytic procedures and as well as test the sample of revenue transactions when it comes to all your different user streams. So utilities, recreation, those type of items to make sure that they're accurate. So we had no significant findings there. When it comes to operating expenses, one at risk here is that you potentially have fraudulent expenses or you have expenses that are in the wrong period. So you've got items, you're trying to conform to budget, so you're putting stuff in 2023 when it should be in 2022. So again, we update our understanding of process and controls. We do audit significant expenses, but we also audit non-significant expenses. So we're trying to use models to help us get an understanding or completion or coverage of your expenses. So we're not just auditing large numbers, but we're auditing small numbers as well to ensure the population as a whole is free from material misstatements. And as well as perform searching for unrecorded liabilities. So looking at transactions that are occurring subsequent to year end and make sure that they've been recorded in the correct period. So we had no findings in that area as well. Salaries, wages, and benefits. So risk here is that you've got fraudulent employees potentially that are getting paid, or employees are not being paid their correct approved rate. So again, we update our understanding of process and controls. We perform tests of controls over significant HR functions such as payroll, hiring, and terminations. We perform substantive analytical procedures and as well as reconcile your T4s to salaries, wages, and benefits. So we had no significant findings, but we had some other matters that we'll raise with management in our management letter. When it comes to cash, here we want to ensure that the balance is accurate at year end. So we do confirm the bank balance directly with your financial institution. We audit reconciling items there, so we had no significant findings there. Remember, we had some comments in there in regards to our management letter. When it comes to receivable balances, again, we want to make sure deemed collectability to be there. So again, we're looking at payments or received subsequent to year end. We're looking at the collectability of AJR historically. We're looking at potential assessment values against those. So we have no significant findings there. Tangible capital assets, that's a big area for any municipality. You want to make sure that items that you are capitalizing are actually capital in nature. Do you have items that have been expensed that should be capitalized? So again, or in the wrong area, or do you have tangible capital assets that need to be written off, or there's an impairment, so they no longer provide an economic value to the municipality? So we inquire with management regarding any impairment. We perform substantive tests of details over additions as well as contributed assets. So did you receive any assets in the year? That non-paid, non-cash assets. We recalculate your gain loss on TCA as well as recalculate your amortization expense. So we had no significant findings there. Accounts payable and accrued liabilities. So here, again, we're looking at items when it comes to cutoff, making sure that those have been accurately recorded. So we had no significant findings, but we had some other matters to management's attention in the management letter. When it comes to long-term debt, again, want to make sure that's accurate. So we do confirm directly with the province of Alberta. So we have no findings there. So when it comes to significant findings here, this is where we're in discussion of the qualification that is present within the financial statements. So here, the municipality does have a proportionate interest in the West Yellowhead Regional Waste Management Authority. So under Canadian Public Sector Accounting Standards 3060, interest in partnerships and municipalities should be consolidated as proportionate share of the financial and non-financial assets, liabilities, and results from operations. The authority's financial records have not been prepared and the audit of the financial records have not been completed. So in the current state, the authority cannot be consolidated with the municipality's financial statements. Consequently, we have issued a qualified opinion as we have been unable to determine which amounts to consolidate where necessary within your financial statements. So historically, the authority's accounting or financial records have not been completed such that consolidation could be completed by May 1st reporting deadline. We had this problem last year, so we were able to get them at some point, but they seem to not, it seems to be not available at this moment here in June. So having accurate and complete financial information is important to ensure the municipality is able to appropriately budget for future expenditures, i.e. closure and post-closure costs that it may be responsible for. So you're missing a larger liability on your book right now in regards to that. So obviously the authority, in turn, your hopes is either collecting enough requisition payments from you, charging enough fees in order to ensure that it has sufficient funds to meet the post-closure liability going forward. But as a member or 20% ownership in a municipality here, you don't know that because there's no financial statement to tell you otherwise. There's just a lot of questions then in regards to that going forward. And that's really the concern there. So we recommend the municipality work with the authority to ensure that the financial records are completed and have been audited in future periods such that it's readily available for the user of the financial statements, example, authority members, municipalities as yourself, so you're able to see where the financial performance is at. And if you have any questions going forward with that organization or concerns that you should have. So that's kind of where our I guess opinion or issue is in regards to that and why the qualification is there. So we felt that it was appropriate that we could issue a non-consolidated statement. However, based on Canadian Public Sector accounting standards, you are required to consolidate your portion ownership of this entity. So this is kind of the best approach that we can come up with. Obviously, we don't want to issue qualified statements, but at this time, we don't know when we'll be getting the other information needed in order to provide consolidated statements of the whole municipality of Jasper entity. I'll let Bill talk a bit more.
Your Worship, I just want to speak to that point. It is, certainly not administration's preference to have a qualified audited statement, an qualified report. But we, on balance, looked at it and in discussion with the auditors, we're confident that our internal processes, internal municipality of Jasper, were solid, defensible, reasonable, and accurately represented. It is this external information. And so our choices were sort of, well, do we wait until that information is available, which we couldn't, we don't have direct control over that. And the implication of that is it makes us later and later in our reporting to the province. So in discussion with Director Malinchak and Jeff, we came to the resolution that providing timely information to council, the public, and the government about the municipality's 2022 financial results, that needed to be a priority, and that the risk associated with the liability with West Yellowhead was known. We understand what that is from previous audited financial statements. Hasn't materially changed. And so while we can't represent that here, we didn't want to hold our audited statements and damage the municipality of Jasper's reputation with either council, the public, or the government of Alberta by not being able to produce annual statements for our 2022 year. So that was a management decision taken in consultation with the auditors, and we really appreciate Jeff and his team's ability to work through that issue with us. I can assure you that it's not satisfying for either administration or the audit team to have less than complete information here. But again, we, I think, all have confidence that the audit demonstrated that our internal things at the municipality is in control of or accurately and fairly represented.
Thank you, Mr. Gibbon, and thanks, Jeff, for that. And just for council's benefit, I too can speak briefly to that. So Councillor Wilson and I sit on the West Yellowhead Regional Waste Management Authority, and we raised this at a recent meeting. Yellowhead County is now charged with doing the administrative work. The accountant who was in the meeting when we last met recognized the problem but had never identified it as a problem, because for Yellowhead County, that scale of liability is not material. It's material to us. It is not material to somebody like the county with multiple times our budget. So he had simply not identified it as something that was holding us back, but it does impact Hinton and Edson, though they are in a similar spot. They cannot finish their own audit financial statements for the same reason. There was, I think, an understanding that Yellowhead County would hurry to get this completed, but for the last 8 weeks, they've been fighting fires. And so it has been understandably put on a back burner. So we do appreciate that it causes grief for our own administration, for our auditors. And hopefully this will be the last year that it happens, because Yellowhead County now understands that the reporting that they provide to the regional management board impacts our reporting to government. And I think that things will be different moving forward. But thanks for raising all that. Councillor Demota, you have been patient and you have a question.
It's good. I appreciate that. I have to learn patience. Just outside of government business and in the private sector, when you're dealing with a large corporation or even in some small businesses, you have to work with other people's or other businesses' fiscal year ends. And sometimes that doesn't line up with yours. So what I was thinking here, and it's not even a matter of cooking the books or anything like that, because you can't do that, but is there a way to just, instead of having such reliance on someone else's accounting information, why not just use the prior years as their liability? So this would go into the 2023, and then we'll always be a year behind on their stuff, but use it for our upcoming years. So then this would, once we get that information, and that liability would be within the 2023, as opposed to waiting to have our books done for 2022, and then next year, so on and so forth. So we're not held by, you know, an outside agency. Like, are we or even my microphone doesn't like me talking. Are we legally bound by waiting for those financials?
If in essence, when we're giving an opinion, we're giving an opinion on the full period, January 1, 2022 to December 31, 2022. If we were given information that was 2021 in this year, that wouldn't be accurate for us in accordance with our audit. So based on the, you know, the millions of dollars that are, you know, missing on the balance sheet or potentially in your statement of operations, we feel that it has a material impact on your financial statement. So if the information was a year behind, when we're given an opinion saying this in 2022, we would give an inaccurate opinion. So that's why we couldn't necessarily do that. We were in, yeah, we can probably talk more on camera about it, but yeah, so that would be our opinion on that. So we couldn't necessarily just take last year's kind of, you know, maybe a year behind or something like that. We need the actual information. And then we're getting an audited financial statement from the authority, and then we're taking the reliance on that auditor's work that these numbers are accurate, and then giving our own opinion then on Jasper with that work. So kind of in conjunction. So we want to make sure that that's what we're providing at the end. Yeah.
Thank you.
Thank you. Other questions? Mr. Allison, 2 questions from me. In a few of the categories, you've indicated that you have or will raise other matters with management as part of the management letter. Is that a letter that is also available to council and to the public, or either of them? Or are those matters better addressed in an in-camera session?
They're just not, we just don't view them to be significant in the sense that, you know, they have an impact on necessarily the financial performance or results they're given. They're just additional items that we've noted during our audit that we're just trying to provide additional value to management. That report is available. It's on the page 12 of my report. It does indicate that a management letter will be provided. And then I always indicate here that council can definitely ask management for that letter in order to review those additional findings there, but nothing of a significance from our professional opinion that council does need to be in this report per se in regard to the area. So, you know, if we had significant findings in certain categories, we would then address those with council in this report.
Thank you for that. The other question I have is just particular to tangible capital assets and your response to the risk there. Very particular question about amortization. So you've recalculated that. But looking at a document that's not part of your presentation, but it's in the next item on our agenda, I see that for tangible capital assets, there are a range of years usually for assets to be written on or amortized. So for pipes in the ground, it might be up to 70 years, and for buildings, it could be up to 50. Who chooses the amortization period? And is this just the art of the accountant, and that's why we hire you, or who's making that determination about the life expectancy?
Yeah, so you would have a policy, obviously, that I would recommend that you do look at least every 5 or 10 years to see if it does need to be updating for new expected useful life of assets. But mainly those rates are actually coming from internally through administration, through management in regards to the expected useful life. So a good one is always like a loader. If you're expected to replace that loader based on taxation or within your reserves, you're saving up for doing every 5 years. It's a good idea to maybe amortize it over 5 years because that's the expected useful life of that. I don't know if there's an actual science for roads and pipes as of yet. Tangible capital assets didn't come into effect till 2009. So it is about 13 years or 20 years into 13 years into doing the into this. So it's hard to say how long this stuff will. Obviously, initially in 2009 there were reports, engineer reports given, expected useful life. A lot of that information was taken to initially set up some of these assets, and then going forward, policies have kind of been followed within those categories. But I think it's good to look at your tangible capital assets, see if things are lasting what you're expecting them to last, especially when it comes to machine and equipment. Any other sort of items that are maybe 10 years or less, making sure those are accurate. But when it comes to roads, utilities, then with roads you have a base layer, potentially a paved layer. What are you replacing, those type of things, and kind of maybe adjusting that as needed to make sure that your amortization estimates are in line with expected replacement.
All right, so fair to say then that when you look at it, doing your audit, you recalculate the impact of amortization based on our tangible capital asset policy, and you're not expressing an opinion with respect to the appropriateness of that policy. You're just doing the calculation to see whether it worked.
Correct. We're making sure that you're applying it based on your policy. Now, if your policy said your road was going to last 5 years, we'd probably give you a comment saying, well, that's kind of out of line of what you would, kind of see from other places. But as long as it's within a norm or within what we're seeing from other municipalities or other public sector entities, then we would deem to, give an opinion on that. But if, we wouldn't feel that you're, outside of scope. But I think it's important to, asset management is a big topic. When it comes to accounting, everything is based on cost and historical value too, right? So it's not like things are adjusted fair market value, but it's good to ensure that, your amortization is kind of in line with what you're expecting for replacement and expecting for useful life of assets. Now, things don't last infinite. There is definitely useful life of something having to be repaired or, or replaced. So, but again, it's, one of those things I think that's still newer in municipal government, especially in Alberta. So something to be looking at and changing going forward.
Thank you for that. Are there other questions at this point for Mr. Allison? If there are not, I would invite a motion to move camera.
I got some more. I got some more.
Oh, I'm sorry. Didn't mean to cut you
No,
off.
that's okay. I know I stopped after the qualification, but I got a few more items.
Oh,
I'm only halfway done. Anyways, I'll go through it quick.
Only halfway.
Internal controls here. So we didn't have any significant deficient internal controls. Your accounting practices, policies, and estimates we feel are in line with again your policies and Canadian public sector accounting standards. We did encounter significant difficulties, but mainly in line with Waste Management Authority financial statements. Management representation letters here in Appendix 2. So once we get a signed copy of that, we'll be able to issue financial statements, and then our management letter that will issue to management, and it could be available to council as well. So the municipality restatement. So again, you do have a 20% ownership in West Yellowhead Regional Authority. So these are the items that affected that on the balance sheet here, as well as the net change on the income statement from prior years. So what the amounts were previously, what the restatement caused, and then the new restated values on the financial statements. That's also present in a note near the end of your financial statements. When it comes to adjusted difference, so we were required to make 20 or recommend 20 audit adjustments. Those adjustments result in an increase in your assets of 3.2 million, increase in liabilities of 200,000, a decrease in your accumulated surplus of 1.9 million, and then an annual surplus change of 5 million, which is mainly in line with the local improvement tax adjustment there. When it comes to unrecorded misstatements, so these are entries that are not reflected within your financial statements. So they come to a sum of 49,000 for an understatement. So we don't feel that in conjunction, these adjustments not being present in your financial statement would change the effect of a user's financial statement. So again, it's a $49,000 change. Those items are in relation to account for municipal over levy liability, to account for a credit memo that was issued, and as well to account for potential capital assets that were previously expensed that were then capitalized in this year versus in the prior year. So the net effect of that again is an understatement of 49,000. We don't feel that this would have a change of any user's view of the finance or the municipality. Appendix 1 just required communication here on independence, so we don't hold a financial interest position, have a personal or business relationship or economic dependence on the municipality. Appendix 2 is our management representation letter. Appendix 3, so new and revised accounting standards. So as exciting as this year was, next year will be even more. So next year we have some changes on the horizon here. Financial statement presentation. You can see some changes there in the presentation of some items. Financial instruments, public sector 3450. There'll be additional disclosure where it comes to your financial instruments in relation to receivables, investments, and cash. And then as well as the main one being asset retirement obligations, PS 3280. So I have a couple slides here on that, but mainly here, we want to ensure that our clients are starting the process of PS 3280. What this means is that within the municipality, you need to identify if there are any tangible capital assets that have an asset retirement obligation associated with that. So what that means, you have a legal obligation to put in more money in order to retire that asset. So a good example of that is the building. If the building contains asbestos, you have to pay an additional cost in order to either remediate that building in order to retire that asset. So that cost is currently not reflected on your financial statements. Effectively for December 31, 2023, that cost will be reflected on your financial statements. So administration needs to identify which assets potentially have an asset retirement obligation. They then need to estimate that in a reasonable manner so that we can then account for it on the financial statement. So that's the main section coming through. The main real difficulty here will be getting completeness of these things. So are you going to go through all your buildings to see which ones potentially have asbestos and get someone to do that? When it comes to, there are any fuel tanks in the ground that potentially have additional costs associated with retiring those assets? Are there any other assets that we're not thinking of that actually involve additional costs in order to get rid of those? So again, some work in there, some due diligence. I think it's good practice, though. I think what's going to happen is some of these liabilities don't exist because they do. Like if you were to retire a building, you'd have to pay a cost right now to remediate the asbestos. So getting these costs on your books allows you over time then to collect funds in order to have it set aside to pay for that liability. So it's definitely going to provide value, and then you can make better decisions by seeing these on your financial statements versus knowing that they're there, but not knowing that you have to pay for them, right? So I think it's good practice. I think it's a big undertaking, definitely to make sure that we're getting everything and that we've identified everything. I think that'll be tough. There's definitely a lot of tangible capital assets within the municipality, and then ensuring, again, that they're there. So that's kind of the last part there on asset retirement obligations. So now I'm done, I promise. If there's any other questions, you can let me know.
All right, thank you. You've retired on retirement obligations. Councillor Demota.
Yeah, just going back to some of the information there, and I apologize, we were just moving so quick and I didn't want to hold up the process. I just have a couple of outstanding questions, and if I may refer you to the operating revenue, which is in our council agenda 27 of 108. We have investment income there, and our 2022 actual is 495, so $500,000, or sorry, we'll get you on that. Yeah, 432,000. And in 2021, it was 114. We budgeted for 204. So is that cumulative on top of 2021, or is that just what we made in investment income for the year of 2022?
So that is just that's just your 2022 investment income that you would have earned on your cash. So that is really in line with the increased rates that you saw. Really in Q4, see the big spike there when it comes to the increase in rates from Bank Canada as well as the banks following that. So this is pretty common. A lot of, double, triple the amount of investment income year over year with other municipalities. Okay, but I see.
Great. And then the other, moving to the budget data on 33-108. Just some clarity, I circled a couple of things here. So when we have the annual surplus and we have the add back net transfers to and from reserves, we have $16 million, 16.5 that is budgeted for, and the actual is just over $1 million. What accounts for that? Just like, what does that all mean?
So basically, when you were budgeting, you would have budgeted to pull money from your reserves, likely to file or to fund acquisition of tangible capital assets. As you can see, that was kind of budgeted at 26, but actual was only 4. So you might have had, ideas within your budgeting process that you were doing certain things, or maybe with, within the coming years. But that's how it was budgeted for, based on your internal documents there. So that's where you see it kind of swing.
Those two are
so
that okay, I have them both circled, so that makes sense. Okay, thank you for the clarification on that. And I think that's all I have for.
Plus, then you probably might not be factoring grant money that you would have obtained that you didn't know at the time, and then that kind of covers versus having a transfer, or or you end up with a surplus that that you're using that you had back in others.
All right, thank you.
Any other questions at this time for Mr. Alliston? As Mr. Gibbon has indicated, it is good practice to go in camera. If there are any other questions we might like to ask. I did this earlier and I'm back to it. I would entertain a motion, Councillor Wilson, that council move in camera at 2:59 p.m. All those in favor? There are none opposed.
Your worship, just for the matter of the recording, may be helpful if council lets us know when you think that you come back, but I'll also just say that myself, the directors, Director Malinchuk will leave the room. We'll ask Ms. Acorn to stay to make sure to run the Zoom and take any minutes, but the rest of the management team will leave the room.
Thank you, Mr. Gibbon. And I take it that can they log back into the same link for people who are watching?
I'm going to turn off the sound and the sound in the video.
But we will leave the link open. You just won't be able to hear or see.
The recording will be paused. It will magically appear on the screen.
Okay.
Ready?
Thank you.
Okay, I'm going to mute and pause now.
All right, thank you all. We reverted to open session at 3:33, I think it was, and recess, and we are now back and we are in open session. So welcome back to those people who are joining us on the Zoom platform. Mr. Alliston, thank you again for your presentation and answering questions in the previous open session and again in the in-camera session. I think that council now has exhausted all the questions that they have for you, and we thank you for your presentation, and we thank staff for the assistance they gave you in preparing your audited qualified statement to us. Is there a councillor now prepared to make the motion with respect to receipt of Mr. Alliston's presentation for information? Councillor Wilson. Moved. All those in favor?
I have a question. Are we accepting or receiving? Because you said receipt, so
Did say receive.
you said receipt in receipt, so I just wanted to make sure because in the recommendation it says accept. So
It says receive,
I apologize. I don't know what I was reading then.
and I said receive.
Thank you, sorry.
And I have a motion from Councillor Wilson to that effect. And I will call the question. All those in favor? There are none opposed? That is carried. Thank you, sir. That takes us to agenda item 6, new business. 6.1. Again, 2022 audited financial statements and a request for decision from administration. Mr. Given.
Your worship, Director Malinchuk will be handling this report.
Thank you, Mr. Given. Good afternoon, Council. So today administration is coming to Council with a recommendation that Council accept the 2022 audit report presented today on June 20th, 2023 as information, and that Council accept and approve the audited financial statements of the municipality of Jasper as presented for the year ended December 31st of 2022. The municipality of Jasper, or any municipality, is required under the Municipal Government Act, Section 276, to prepare annual financial statements that follow the Canadian Generally Accepted Accounting Principles. The municipality must submit required financial statements by May 1st of each year. And as we have discussed prior, that the reason that we had to ask for an extension was because of the consolidation of the West Yellowhead Regional Waste Management Authority financial statements. So that is well known now, and we know what's going on, and hopefully we can move forward and prior next year's. Basically we had asked for an extension, and we had asked for an extension until the end of May, but then we received a letter back saying that they had extended us until the end of June. So we were good with that. So today you've seen an overall financial position of the municipality as presented in these statements for December 31st, 22 as once again positive and reflecting council administration's ongoing focus on prudent financial management. In this report, there was just a few things that I highlighted as kind of note to, and we've already discussed this as well with Metrix Group, but the treatment of amortization within the financial statements and how that is recorded within the financial statements. And sorry, as well about the landfill liability. So well discussed already. So I won't go over that anymore. And then I just done a bit more of the financial analysis on debt limits. As discussed with Mr. Allison before, that and during this council meeting, that basically in the audited financial statements that the debt limit is very high for the end of 2022. Therefore, I just adjusted it by that local improvement levy to give a better reflection of where we would stand in our total debt limit and where we are for unused amounts, so that we're not unprepared going forward into future years, being that that is a large amount that we're not used to accruing in a year. And as you had seen in the budget process, I've done some projected remaining debt limits, and on page 42 the projected number was 17,608,000. Therefore we still did better than predicted, which came in line with doing extra good with the parking and also doing better in some areas as well. So we're really excited about that. And then the annual surplus, I just also wanted to highlight, you know, the annual surplus or could be deficit includes the full accrued amount for that local improvement levy once again. So I put that into context in the 5.2 million, as well as the non-cash adjustments for the amortization. If you just factor those two alone, then the surplus is looking more like that 3.4 million. But then there's other receivables and whatnot as well that you have to think about within the context of that surplus. So that is not a cash surplus, as Mr. Allison as well has noted within his presentation. So we both were saying a lot of the same things in our presentations, but just to highlight the report. And what you see after that is the financial statements as presented. And Mr. Allison has also already gone over the auditor report. And there will be one page for the mayor and council member to sign after the meeting and once the motion has been given. Thank you very much.
Thank you, Mrs. Melanchuk. Questions from councillors? Councillor Melnick?
Go ahead. No, nothing. I was just going to say, if there were no hands up, this is where I saw accept and not receive, and I was jumping ahead.
Councillor Melnick.
Thank you, Your Worship. And thank you, Director Melanchuk, for this summary and the adjustment for the debt analysis for us as we move forward. I see the calculation of the annual surplus, and I would ask for clarity on the annual surplus numbers that we use for our new directive that I believe we passed earlier this year regarding how we handle the annual surplus. I would like to see how we have a confirmation of that amount. And I believe we will be dealing with it at a future council meeting. And I'm just wondering when that might come to council as to our allocation of the annual surplus to the various reserve accounts.
Your Worship, through to Councillor Melnick, thank you for the question. The work has begun on that. However, it is a lot of work. I don't see it in the next 2 weeks, but soon thereafter. So hopefully within July and early August at the latest.
Thank you for that. And I guess what we're working towards is what would be known as the operating surplus, as opposed to surpluses with adjustments for amortization and so on. So I think we'll see a number that'll be less than this, that is the actual operating surplus for the muni.
Your Worship, through to Councillor Melnick, yes, much less.
Thank you, Councillor Melnick, for the question and for the response from the administration. Appreciate that. Any other questions? Councillor Demota.
Move the council accept the 2022 audit report presented on June 20th, 2023 as information, and that council accept and the audited financial statements of the municipality of Jasper as presented for the year ended December 31st, 2022.
Thank you for that motion, Councillor Demota. Any debate or comments? Well, I will certainly vote in favor of the motion, but I want to use this opportunity to thank you, Mrs. Melanchuk in particular, and whatever other staff assisted you for once again getting through this, given all the challenges of this year, and particularly the delay. So we've had to get a qualified statement, but I think I can say that I'm unqualifiedly supportive of the work that you have done. It's another great presentation, and I'm encouraged as always to see the consistency between budget and actual, recognizing that this year there were some oddities to throw things off. But again, I credit you for the work that you presented to council. Thank you very much for that. If there are no other comments, I will call the question. All those in favor? There are none opposed. That is carried. Thank you very much.
Great job, everybody.
Right.
Revenue.
Thank you, Mr.
It
Allison.
was great to see everybody in person this time.
Yeah. That's right, a couple of years in a row.
Emailing his passion last week, I was like, the highways closed, like, am I gonna be able to? Anyways, thank you.
Thank you. Thanks.
That takes us to agenda item 6.2, I think. Storage lot bylaw. And Ms. Nadal, since you have taken a seat by a microphone, I presume I can look to you to present this item to council.
You can. Thank you, Your Worship. Good afternoon, everyone. The storage lots bylaw is here for first and second reading. And as presented in the report, the change is reflective of direction we got from council in March about S-block parking, generally speaking. And the only changes that are proposed to the bylaw at this stage are in the schedule that sets the fees. So as discussed and directed by committee in March, the current cost of a storage lot is around $325. And that would increase to $450 effective for the year 2024, which the renewals take place in the fall. So we're here in advance so we can provide enough notice to the users. And that $450 came from an analysis of comparable services in other communities around Jasper. And looking at the level of service we provide, this was the number that was recommended by administration and supported by committee. And although we are not in a position to currently offer the $30 discount for electronic payments, that is definitely something we're working on and we want to offer sooner than later. So we have included that as a provision in the bylaw, and I believe that the wording presented should reflect that. When it is available, it will be applied. So we trust it would meet our current needs, but also allow us to implement this discount as we improve our program and move forward. So the recommendations are two separate motions, one to give first reading, one to give second reading to bylaw number 254, the storage lots bylaw 2023. Thank you.
Thank you, Mr. Don. Questions from councillors? Councillor Melnick and then Councillor Demota.
Thank you, Your Worship. Just for clarity on page 99, we have reading for the first time. We have dates of the 3rd day of June, or sorry, 3rd day of April of 2018, 5th day of June 2018. So we can read or do the reading of the bylaw, first reading, but with the, I guess, changes to that page to reflect the dates of today.
Thank you for that, Councillor Mellon. Absolutely correct. Councillor Demota.
I was just wondering if council would think about maybe, because that digital operation isn't available yet, that until we get that we only ask for $420 for the lots until we get that going up. Anybody that wants to go in and do that in person, then they pay the $450. If you want to do it online, then you pay the $420. Just until that gets adjusted.
Is that a possibility? I thought that the reason we couldn't do it, we couldn't give the discount yet, is because we couldn't accept electronic payments.
That's right. So
I don't understand what you say to do it online.
Well, that's what I mean, electronic payments. If I could, I would save $30 by doing that, but you're not letting me do that yet. So rather than just charge $420 until we get that going up. Does that make sense?
But Mr.
Yeah, thanks, Worship. No, I appreciate the question and for Councillor Demota and for council. Administration is reflecting that the actual price of the lots is $450. That's the price based on market conditions. And we're saying when we have the opportunity to offer a discount off of what the price should be. So we're not So rather than setting the price lower, we're saying the price is what the price is, because for now, we will have a cost of handling those in person or check payments or whatever sort of form they come in. And in the future, when we can figure out a way to squeeze more efficiency out of our system or a lower cost of doing business, then we'll pass on that savings on to the ratepayers. So the cost is $450. The bylaw, the way it's written right now, provides an opportunity for us to pass on savings if we can squeeze savings out of changes to our system. But as it is today, the cost of providing this and the fair market value of providing these spaces is $450. It is less than $450. That makes sense.
I understood that, and I was just, because there is some space in there for when we do get that, because that's worked into the conversation that while we're waiting, just throwing it out there, the council would consider forwarding that adjustment. It doesn't have to be, just asking if anybody else thought that was a good idea. If you don't, that's okay. I just like to throw things out there as my style.
Are there other questions of administration or comments from council? I have two questions. This bylaw applies to the lots that are storage lots, but not the parking lot. Is that correct? The parking lot in Block S is dealt with separately in this bylaw.
That is correct.
And I struggled a bit to understand what we allow to be stored. So it appears to be vehicles and boats, but I don't know for sure what a boat is there any issue that gets presented to administration or anybody else in the organization that has to deal with the question of whether or not an item can be properly stored in those locations? And would staff receive any benefit if council was clearer in its definition about what can and, more importantly, what cannot be stored in those lots? I mean, it talks about boats. Would that include a raft? Would that include a kayak, a canoe? I don't know what else people could do. A raft, perhaps. I don't know exactly what we intend, but I understand that staff can face challenges with the public. So if staff is comfortable with that wording, I can live with it.
Thank you for the question, Your Worship. I think by and large, vehicles is what gets stored in those lots. And the basic premise is that the vehicle has to be registered and insured. So if it needs to be moved for a reason or another, it can be. So the vehicles have to be in running condition. And I see under section 5.3 specifically contemplates truck camper not stored on a truck and a boat not stored on a trailer, which I think those are few and far between, but also the definitions are, it doesn't contemplate any other items that are not vehicles. So I think it's manageable in that sense. And the update here is for the fees only, but certainly the bylaw, generally speaking, could probably be improved in other ways. And as we progress with the rest of the S block plan for parking, so that includes the newly paved parking lot by the train tracks and other initiatives in there, I think it is possible that we would come back with further edits to the storage loss bylaw, but currently as it stands, it does give us the ability to implement the program and enforce what we need to enforce. And we still have a fair bit of work ahead of us to make sure that all the leases are in compliance, as in I am aware that there are items that do not meet the criteria that are in the current bylaw. So as we progress towards compliance, then eventually we could look at changing those clauses. But for the time being, I do believe it functions for our administrative purposes.
Thank you. If there are no further questions, is there a councillor prepared to make a motion that council give first reading to bylaw number 254? Councillor Kelleher-Ebney. Thank you. Any debate on that motion? All those in favor? There are none opposed? That is carried. And Councillor Melvin?
I think Councillor Demota would like to do the second reading.
Your hand was up first. Go ahead. I already made one.
I wondered whether you might like to offer an amendment to read a first time this 20th day and a second time this 20th day on the record, and then we can have a motion.
I can definitely do that. Because we do have the notation here of the dates being read the third day of April, amendment to the item that the council gives second reading to bylaw. Oh, sorry, I'll do the amendment first. That the amendment to the bylaw to adjust the council read for the first time and for the second time the 20th day of June 2023, the bylaw, and will leave the third time on the day that we actually read that bylaw. So that would be the amendment that I would make prior to the second reading.
Thank you, Councillor Miller. Any debate on that? I will call the question. All those in favor? There's no opposition. That is carried. And so then, Councillor Demota, are you going to make the motion to give second reading to bylaw 254 as amended?
You're a great quarterback. Yes, sir. The council, I move the council receive or I move that council give second reading to bylaw number 254, the storage lots bylaw 2023 as amended.
Thank you for that. I'll call the question. All those in favor? There are none opposed? That is carried. Thank you for that. Mr. Don. That takes us to agenda item 6.3, Recreation Renovation Budget Update. Mr. Gibbon, are you leading that, or is that Director Reed?
Your Worship, Director Reed has done all the work on this RFP, so he should have the enjoyment of being the one to present it. As administration, we worked together on gathering some additional information for council. So you will see that the RFD, I believe we attached the RFD from last week. Committee essentially forwarded that recommendation. So the first item in your package, starting on page 102, is actually the RFD that was at committee, and it is unchanged. Beginning on page 106 is where you will see the additional information that was requested by council at committee. So I think Director Reed will probably focus on the content from page 106 of our agenda package from there on. And that's where we'll start the discussion. Director Reed.
Thank you very much, CEO Gibbon and Your Worship, through to council. Certainly, in my preamble, I will say that if there are any questions about the previously presented information, of course, I would be happy to answer those, but I will go straight to the council briefing, which is the new information that is presented today for council as requested. So at the June 13th committee meeting, council passed the following motion, which basically asked for us to return to this council meeting with a list of costs of items tied to grant funding, as well as costs associated with the items outside of the grant scope, and the additional information on how the project scope grew over the last year. The council further clarified that request to add information on debt financing to be included. And so in the discussion, the original project scope as submitted to the Federal Building Canada grant program in 2019, which I will say that's my best research. I can't say it was exactly 2019, but it was either right before 2019 or in 2019. The Jasper Recreation Facilities Renovation Upgrade Project, the project will include the improvements and upgrades to 5 recreational facilities and includes at the Activity Center, Arena and Curling Rink, the upgrades to various rooms. The most prominent, of course, are the change rooms, stairs, access points, and electrical fixtures. Relocation, and I skipped over the Zamboni room because it's largely done, and so you won't really see any of the changes that will occur there. The relocation and rebuilding of the common arena and curling rink refrigeration ice plant. And so we've been calling this the separate project, the ice plant project, but it is part of this overall grant. And then along with installation of new dehumidification system in both facilities. There's a bit of a typo there, a carriage return missing. So activity center upgrades, the multipurpose hall, entrances, lobby, and change rooms. And that's, well, the rehabilitation of the heating, ventilation, air conditioning system, fire suppression system, lighting, and sound system. A new elevator between floors and added programming space in the activity center. And then this is also a typo. We were working pretty quickly to try to get this to council with good information, so I missed a few of the edits. So under the fitness and aquatic center, the upgrades to the wave pool and hot tub sand filters, heat exchangers, and chemical feed system, improvements to the lighting, fire suppression system, and upgrades to change rooms to make them more accessible. I should mention that the change rooms were put in this project partly because they are at end of life. So it doesn't say that, you know, there are also end of life issues there, but that is one of the things we are addressing, and we get to make them more accessible while we do that. In the Centennial Park log cabin did indicate we would replace the roof and renovate the bathrooms with general upgrades to the electrical distribution system in each of the facilities noted above. And so that total project cost estimated in 2019 was 9.2 million. And then the scope changes that have occurred, and they were all approved by council. On May 3rd, 2022, council approved the following: arena dressing room expansion to add 5 new dressing rooms to the west and south, which was estimated at that time, and that was a Class D estimate rather, $3.3 million. Activity center conversion of the downstairs sauna to additional washrooms at $133,000. The aquatic center complete renovation of all existing change rooms for the cost of $342,000. On September 27th, 2022, council approved the following: reduce the project scope from 5 to 3 new arena dressing rooms in lieu of adding about $2 million to the project, and approved the design change to non-gendered change rooms in the aquatic center with no change to the project budget. And then in January to May of 2023, that should read, my apologies again, administration and the project team undertook value engineering work to reduce the cost within the council approved scope as the accuracy of cost estimates improved. And the following chart shows the large blocks of the project with the related factors. And in this chart, we are hopefully answering the questions brought forward last week. So the additional new dressing rooms, so that tells you what the inclusion is, what the cost is, whether or not it's part of the grant. And so you'll see that this top line is the only one that's not required in the grant, and also the only one that's not urgent in the way that the grant asks for, and also in the way of sort of life cycle maintenance and or service delivery. And then the service impact column is probably key to what council has to deliberate on. And so in this box, you can see that's the additional service, and the benefits are the increased number of dressing rooms. So the renovate the existing dressing rooms. So we're adding the corridor and then renovate those existing dressing rooms to be accessible. Cost of $2.5 million. Yes, that's a grant component. It's high urgency, and it brings us improved service, and it meets accessibility needs. The benefits: improved functionality, accessibility, and life cycle reinvestment. The aquatic center renovations, so the change room renovations, lighting, mechanical system repairs and replacements, another $2.5 million. And this value, the reason it doesn't say estimate is this is from our quoted returns from the tenders. So this is a Class A number, not an estimate anymore, but a tendered number. So that's why it says value. So that's also grant component, yes, and urgency high. So improved service, meet accessibility needs, and meet current regulations. And there's improved functionality, accessibility, and life cycle reinvestment. The activity center renovations, so that's the elevator, main doors, entryway improvements, basement universal change room, and the arena activity center shared services, So that's mechanical, electrical repairs and replacements, lots of back of house things. And those all fit under the remaining 9.8 million, and they are all connected to the grant, and they are all high urgency. And we do get improved service, meet accessibility needs, meet current regulations, and or meet current service expectations. So improved functionality and accessibility, life cycle reinvestment, and safety will be the benefits there. And then the discussion of debt payments. So our recommendation says we would request 6.4 million of borrowing, and that would increase the annual debt payments by approximately $520,000 starting in 2024. We do have one tax funded debt payment that will be expiring in 2023. This expiring debt will reduce the municipality's tax funded annual payments by nearly $50,000 beginning next year. And in 2024, the municipality also has one utility funded debt payment that will be expiring. This expiring debt will reduce the municipality's utility funded annual payments by $107,000 and change in 2024, and a further $102,470 beginning in 2025. And there are no other debt repayments or debts expiring and debt payments ending before 2034. There is a planned debt payment of $184,000 for housing beginning in 2024, an additional payment of $184,000 again planned to begin in 2025. But this comes with the caveat that if the municipally controlled corporation is formed, these planned payments towards housing debt would be carried by that development and not by the general tax base. And with no further ado, I'm open for questions.
Thank you, Director Reed. Questions from councillors? Councillor DeBoer.
First, I'd like to thank administration and in particular Mr. Reed and maybe Ms. Malinchek for coming up with those numbers. And I really appreciate that, because that was a question that I had asked, and it's pretty straightforward. And it's nice to have that those optics and being able to look at that from a higher level. Thank you.
Councillor Hall.
Thank you, Mayor Ireland. My question is, was the original grant was 9.2 million in 2019, and that was based on that's what the project would cost?
Your worship, for Councillor Hall, that was administration's estimate of what the project would cost without the benefit, I think, and Director Malinchuk was there at the time. I think the former Director of Culture and Recreation likely itemized a bunch of these. I would suggest that there wasn't a high level of analysis of what current market conditions for 2019 were, which is really what happens with administration as we're bringing budget recommendations and even grant applications. There's a pretty wide range of how we develop those numbers. In the best of cases, we bring out in some outside expertise and we do some work, and those are the best examples. And there are other ones where they're conceptual examples. And so I don't know if Director Malinchuk would like to speak to what she knew about that project. I believe it was initiated by the Culture and Rec Department. But I haven't seen any evidence, and I may be wrong, I may not have seen it, but I haven't seen any evidence that there was outside consulting expertise that itemized the costs back in 2019. Right, so setting aside escalation and everything else, it may have been a high order conceptual cost. I can't remember what class that was on that diagram that we looked at last time, but it is at the far left hand of the scale, where you're probably still at easily plus or minus 20%, plus or minus 50% in 2019 dollars. Director Malinchuk, is there anything you can speak to about how those numbers are developed?
Yes, thank you. So there was the report that was issued from Group 2 that some of the figures were taken from, and that obviously occurred a bit prior to the numbers being put together, but not tons of time before and without tons of increase as we've been seeing lately. So there were some figures and recommendations being used from a consultant, sorry. However, yes, the biggest changes are coming down the pipe because of what we're going through now in our world situations. But and yes, 2019 actually was a long time ago. So, yeah, thank you.
Go ahead, Councillor Hall.
I just asked, because I wonder if we had, like, did we apply for that number and got that number? Is that how it worked?
Your worship, through to Councillor Hall, yes, that is correct.
And your worship, if I could, amazing what a person can find. So I do have the group 2 report. And so the recreation facility assessment was completed in April 2016. So in 2018 or 19, we submitted a federal grant application based on 2016 numbers that were not, they did have the benefit of that outside expertise, but they were not to the level of detail of how much would the market charge. They weren't market costed even at that time. So, so that 2019 grant application was probably based on 2016 numbers.
Finish. It just is, it's a tough one because it's all the stuff that we need, but it's going to end up costing us, $8 million extra, $9 million extra on top of that. Is that still is it called the Federal Building Canada grant program still a program? Like if we had applied now today with these new numbers, do you think we would be approved?
Or some more fun for the same project?
In my experience, federal and provincial governments will announce grant programs from time to time, and as a municipality, you're well served to go after them and whenever they're available. And so to speculate whether we would be approved, whether the current government would have the current government probably would have said that there needed to be, significant reductions in carbon emissions as a result of the project, just as an example. And so I think in the 2019 program, there were energy efficiency improvements, and that's why the HVAC systems, mechanical systems are a focus of all the renovations. But accessibility was a big focus, and ensuring the facilities were more accessible. Good goals. Fast forward another, 4 or 5 years to today. And I think it's fair to say that a new government would probably have different criteria. The program maximums are, will be spelled out program by program. And I believe I'm nearly certain that the ISEP program was a competitive program. And so every municipality that makes a submission needs to ensure that their application is as attractive to the funder as possible. I'm sure that's what we would have done back in the day when we submitted the application. How would we make sure any application now was attractive? I mean, we would target it towards whatever the funder was looking to support. All that said, I think your administration is always on the lookout for opportunities to bring dollars from outside into the community to support the community. That is still the case here. There still are outside both provincial and federal dollars coming in. The intervening time and escalation has meant that we're not getting as much of the project done with somebody else's money as we had hoped.
Councillor Wilson.
All these items are listed here as high urgency. I guess my question is, are these the highest urgency items that are associated with the buildings? My concern is that we're going to spend all this money and this, the price tag keeps getting larger and larger, but are the buildings not approaching their end of life? If the change rooms are, then I'm sure the roof is, or the structural integrity of the steel beams in the pool, which was concerned 3 or 4 years ago, which we haven't really done much about. I think we haven't really addressed that. So I just want to make sure that we're not, there's lots of different terms to it, but like we're not just dressing this building up that it is rapidly approaching its lifespan.
Your worship, through to Councillor Wilson and all of council, I can proudly say on the arenas count, that barn was well built. It is well worth investing in. I can honestly say that there are many components to the activity center and aquatic center that are showing that they are well built and well worth investing. The documentation we have from exterior experts would tell us that investing in these buildings is worth doing. To speak specifically to whether or not we got the priorities right, I'll use your example about the pillars in the pool. We are fixing the highest priority ones as part of this project. You will see that next year we do a couple more, and the year after that we do a couple more. Because yes, the priority is that we need to fix the most urgent ones first. The electrical panels is a good example. We don't know how many more days we have left in some of those electrical panels, so they are first on the list. The elevator is coming for a whole different reason. Doesn't have anything to do with life cycle or building maintenance or sort of longevity of the physical plant, but it is longevity of the service we can provide in that building. And the evidence we have from our own internal team, as well as from our external reports, says that those buildings are worth investing in. And we have done the best risk analysis to choose the things that are the highest priority within a full scope of an approved project. There is certainly an opportunity. So if we didn't do the elevator, we could definitely spend that same amount of money on fixing more high priority items for the next few years. The elevator is part of this project, so we, full steam ahead to get all of the aspects of the project that are approved. Will you see more electrical panels next year and the year after and the year after? The 10-year capital plan involves us taking the highest risk items every year. So yes, you will see that we have done that already, and we are going to continue to do that.
And if I mean, just in addition to that, so administration has done that prioritization and has squeezed the highest priority items into the money that we have available today that align with the original grant intent, as Director Reid said. Additionally, I think it's important in terms of scale. The size of this project is large, no doubt. And the aquatics feasibility study that we did, and I believe we tabled with council, did have a bit of an analysis of what the replacement cost of just the aquatic center would be. And it was in the order of 20-some million dollars a few years ago. Question how much that, and that's without demolition costs, disposal costs of the existing facility. So when we're talking about the lifespan of the current facilities, and the limited land area that we have in Jasper, the bones are good. There are some structural things that we can shore up that are worth investing. Administration is confident that these investments will not be wasted. And the community and council should expect ongoing reinvestment in those facilities to keep them up to the standard that they're safe for the public, safe for our staff that have to work in them, and that they provide a lot of enjoyment to the community. But that's going to be an ongoing project, to be really clear.
Councillor DeMott, I saw your hand, but I wonder if I might just carry on with this for a moment.
Yeah.
I perhaps misinterpreted the intent of last week's motion. And you bring it to light in your response, Director Reid. So when there was a request to come back with items tied to grant funding, I was anticipating more particularity. So for example, you said, well, if we didn't do the elevator, we could do a different theme or post in the aquatic center. But I had anticipated that today's report might say, if you don't build the elevator, you don't get the funding for the elevator. That's what I was looking for, because it seems to me that, say, accessibility is an important consideration for other levels of government. And so accessibility items would get funded, but if we don't build the accessibility item, we don't get the funding. And I was hoping today to see a bit of a chart that I could say, well, if we don't want to do that particular item, it's not that we can spend the money somewhere else, it just disappears. But I don't see that in any of this, but is that still a relevant consideration?
Your Worship, I'll take that one. Director Reid and I tag teamed on the report, so I'll take any of the typos that were in there. I think they're in my section. But so the section under discussion that sort of references the original project scope, those items are copy and pasted directly from the agreement that was signed with the federal government for funding this project. So as far as the federal government is concerned and the funder, federal and provincial governments, I guess in this case, those are the things that we said we would do. And as you can see that there's some changes to scope there. You know, the Zamboni room, well, there have been some adjustments, the priority wasn't there. So those types of around the edges, types of changes I think are acceptable. The Centennial Park log cabin, we're not doing that with this specific, you know, $9 million. So there are some changes that I think are within the scope or acceptable, just given the estimations and cost. When we start to get to some of the fundamental things, did you improve the mechanical systems of the facility? Yes or no? You know, did you do things that improved accessibility in the facility? Yes or no? And so the table, so that listing of bullets there is what is actually in the federal grant contribution agreement. And then the table below demonstrates how if the federal funder said, well, did you do what any of the stuff you said you were going to do? We would say, well, yes, we renovated the existing change rooms, dressing rooms in the arena, and that addressed accessibility, and it also did life cycle maintenance. And, you know, well, what else did you do to improve accessibility? Well, we also added an elevator, and we also did the change rooms in the aquatic center. Oh, okay, good. So you did accessibility things. And then, so do you see, so it isn't a piece by piece, sort of item by item accounting for whether something addresses the federal grant or not, because the federal grant was quite high level. From administration side, I think our strategy here is to say, how can we demonstrate that we have met the intent, the broad intent of the federal grant? And we believe the table with the colors on it demonstrates that the core parts of this project do meet the intent of that grant. And we would go to the federal government and say, no, we didn't get the log cabin in, but look at all the other things that we did that meant the intent of the grant. And I think the distinction there, and this is why the alternative in the committee report last week was, if council wanted to get this project closer to the budget, acknowledging that it won't get it within the budget, there's still some money needed to be added. It's the addition of dressing rooms that are outside the scope of the federal grant application. We never told them that we're going to expand our services and add new services and add new space. And so that's why that one, you know, gets the, if there was a portion of the project, the council said we can do without it. Administration advises that that's the one that is not directly tied to the grant, where the others all do seem to satisfy the grant.
Conceptually, we could drop the elevator and use other components to say we met accessibility. Is that how I interpret that answer?
You're conceptually, and I would have a difficult time justifying to anybody how, if there are 2 floors of your facility that somebody can't get to in a wheelchair, how did you really improve accessibility? You know, and so I think that the elevator is a good example of something that materially, you know, impacts one focus of the grant.
Deputy Mayor Wax, I see you, but I've been leaving Councillor Demota hanging, so I will go to him first.
My questions might be multi-tiered, but all it does is the same thing. So I'm just prepping you. We had the conversation last meeting, committee meeting, and earlier today on our debt limit. And if we're working with whatever number it is, I'm going to just work around $27 million right now, even though it's an arbitrary number, but it's a little higher than what we had last year. With the potential investment, the increased investment to $20 million, does that investment increase or provide an opportunity to increase that debt limit because of the value to our enhanced building? That's the first part of my question. I'll wait for that.
So the answer is no. It will increase our tangible capital assets and the value of stuff that we own because we'll reinvest into it, but it won't increase our revenue. And your debt capacity is tied to the amount of income that you have.
Okay. So again, I think I asked this last week, and because it's hard to measure, but if we do these enhancements, we're hoping that we're going to bring in more revenue.
Your worship, through to Councillor Demota, as I indicated last week, there will not be a dramatic increase to revenue on our books. So no matter how many times I rent out any of those facilities, they will never become profit centers for this facility, or for this municipality, rather, for any municipality. These are cost centers. However, the more we bring people to town in shoulder season, the more the community's revenue will increase. But you will not, at the end of this project, you will not go, there's the revenue on our line item that shows this thing was worth doing. This thing, all of these things are only worth doing in the sense of the value the community derives from them, whether that value is for the kids skating and swimming, or the community seeing increased, especially shoulder season revenue.
Okay, so if that is the case, are we able to charge more for what we're providing? And I'm just going to go specifically straight to the dressing rooms at the arena, because that outside the elevator, that's I kind of think is the biggest contentious thing about this project. Is in my position, I feel like the horse was out of the barn already, and the reason we started this whole thing, I know I'm repeating myself, was to expand that area for a multitude of reasons. So we're charging X amount for what we're able to offer. And just like anything else, if we're offering something better and nicer, I'm hoping that we get more revenue to recoup some of those costs. Are we able to test to the point where we know we'll be out of the market, or because of our destination, is when we had our people doing our recreation facilities review said that we're not charging enough. And not a lot of that had to do with our specific facility. It had to do with where we're located. And that will bring more money to the community. I get that. So I guess there is a question there. And I've got one more right after that.
Your worship, through to Councillor Demota, the short answer is yes, of course we can charge more. I will say the staff team at both facilities do market comparables every year. So while we have not ever priced ourselves at higher than sort of anybody else, we are always pushing the limits of what we would consider the market. So, you know, from Edmonton to Jasper is the typical, that's where we get our tournaments. We're getting a few from Calgary. So we know what the market tournament, or rather what the market ice is, as an example. We know what the market lane swim rental is, rather per lane at the pool. So we are definitely in the market. We have not put a price premium on. And I would say again, the revenue line item is not that big, that even if it was 50% larger, it would still not match, it would not recoup the $520,000 of debt repayment, as an example. That is coming as an increased service. That's where that recoupment is.
All right, so then this goes to council. Just next month when we go and review this and come into budget, what we're going to be doing going forward. Had we bought a house years back, and you know we're taking that $500,000 that we'll spend in 10 years. You know, we're spending $50,000, $54,000 a year on rentals. Like, I think we should look at a holistic picture on what we need to do to go forward, and what we're going to be doing for taxation. Because I think for me overall, when you talk about expanding the dressing rooms here, you're bringing more people into the community, and that they would pay a higher rate, I guess. You talk to residents in the community, they're going to say, doing this is oversizing our arena for our community. Arenas are for community members. So we do serve a dual purpose with this, as many other rinks do. But because of our location, what that means to hotels, restaurants, retail, in our community. It does, the sticker shock on this is pretty high, but I think that overall value means a lot more to the community than not having it. That's where I was going. Thank you.
Deputy Mayor Laxer.
My question is specific to the elevator. If you were to build the activity center today, would you be required to put an elevator in?
Your worship, through the Deputy Mayor Waxer, absolutely. We would not be able to build any of these buildings we have now the way they are now. We would have to put in all the accessibility requirements of current code. So yes, the elevator would be mandatory in that.
And would I be correct in my understanding that even if you had built those buildings 15 years ago, you would have been required to do that?
Your worship, through the Deputy Mayor Waxer, I couldn't say the exact date, but I can say with certainty that it was at least 20 years ago.
Thank you.
Your worship, if I may, just on the revenue side, and I appreciate Councillor Demota really turned the focus towards sort of the general benefits of the community, and so that's certainly heard by administration. I did want to follow just to provide context. In the approved 2023 budget and the community development department, the arena shows total revenue of, projected revenue of $313,000 for the entire year for the arena. So that gives you a sense of scale in terms of, so if we were able to increase that by 10% or, that's $30,000. That's not very material in the overall scheme of things here. And that's what Director Reed was getting to. Really, these investments are, as Councillor Demota said, for the benefit of the community, and the activity generated in the facility is for the benefit of, is an investment in economic development for the community in terms of the numbers of people that we can bring to Jasper at any one time. But that is indirect, and it is not something that shows on the municipality's books by any means.
Councillor Keller-Hrampe.
Thank you, Mayor Ireland. I'm really torn on this, but I can tell you the aquatic centre has to be done. I totally agree, it's end of life, but this had come in front of when I was on council in 2019, and the one thing that I totally heard was we didn't have proper dressing rooms for hockey for girls. When I went ahead with this and I gave my vote in favor, was literally to even up the dressing rooms, have proper dressing rooms. I think if we're going to go down this avenue, yeah, it's a big ticket item. Maybe there's other things coming up in budget we may have to cut. But I think we're going to go forward, we have to do it right. Because every year, everything seems to go up and up. And this administration, another study going to come back 2 years from now saying, no, you need those dressing rooms. And then it's another 6 million. So I think, we really have to look at it from the big picture. Like, do we want to be here 10 years from now having this conversation again? We've heard from administration that our buildings are solid. So I think we need to upgrade. We have to upgrade our facilities. We have to keep them current. And hockey with skiing is what keeps us alive in winter in this town. And I think we really have to think about that.
Councillor Melnick.
Thank you, Your Worship. I do want to speak that I would be in favor of this motion, or of a motion to increase the borrowing to be able to complete this project in its entirety. What that would do is we're able to then walk away from the arena and say, we've done the dressing rooms, we've brought ourselves up the code. The necessary infrastructure costs that I see here and the rest of the project, again, gives us an opportunity to get our change rooms up to a certain standard, do the electrical changes, which we are going to be required at one point or another. But more importantly, I'm looking at the elevator, not only for the current accessibility, but also for the potential for the use of the second story of that building after we have the review that we're going to be voting on. Potentially there's this whole second floor that could be added to that center, which the elevator will help if we were to move administration offices to the second floor or create additional spaces on the second floor. I think keeping the elevator in is absolutely critical. I also agree with Mr. Given that I don't know how we could justify that we increased accessibility if we didn't do the elevator. So to me, the elevator is sacred cow, not going to be able to touch that. And I do believe that it is worth the money right now to bring the dressing rooms up to standard so that we can continue to move on and improve the activity center over time and as money comes available. We certainly can afford the borrowing at this point, and with the other debt servicing coming on, it's not as big a hit as we would have potentially down the road. So again, I would be in favor of this motion when it does come to a vote.
To be clear, when I use the example of the elevator, I was looking for items specifically tied to grant funding. I wasn't suggesting whether or not we had an elevator, but if we didn't, does that mean we lose the grant or anything else? Because that was my understanding of our motion. And so I think the answer that I get now is that there is nothing specifically tied to the grant funding, but there is a general conception that we will increase accessibility and do other things. That there are, as I understand it now, no specific items, which if we fail to do, we lose the grant funding. Is that a fair interpretation of where we stand with grant funding?
Your worship, I only wish to add that as CAO Given described, it would be hard to say we met certain requirements with certain key things. And so that is how we broke them down. You know, the fixing the roof on the log cabin is in comparison such a small component of that grant that is what CAO Given and I would call an edge case. We did 94% of what you asked. Here's the 6% we didn't. You take that elevator out, that's like 40% of what we asked. And so that's why it doesn't appear as an option. You take out some of those electrical panels, that's 40% of the upgrading. So that is why it doesn't appear as an easier job, because we already did that part. That was the value engineering that we did do. And I know that puts council in a place where you didn't get to play the game that we all got to play for hours and days of you know, hard looking at the grant, looking at the options, looking at ways to value engineer this price into what we could afford. But none of that worked. And now we are at all of those things are grant contingent, and we don't believe we could take any of them out. Again, to Councillor Wilson's point, we're not doing all of the posts in the pool because all of the posts aren't urgent and critical. So we did that part already. And I hope that helps with the understanding of if we could have cut any more, we would have already almost. But these are the things, and the elevator is a good example. It's too much a cornerstone of what's called accessibility. Same thing with wheelchair access to those dressing rooms. If we don't do that, it would be too large for us to explain away to the funder. Now, do we have a guarantee that would take the grant away? No, we don't have a guarantee, but we can do this based on the sort of industry experience that we have around our table with the whole consultancy team. They've done this many times too. So that's where the level of comfort is to say, this is the package now.
Thank you for that. I will indulge myself for one more question if I may. And this relates to the question of the additional dressing room. So we started at 9.2, kind of a ballpark, and then 13 months ago, council approved adding 5 dressing rooms at a really precise cost. $3,355,756. So we avoided the pennies, but we were pretty precise. So we must have had a fairly good analysis of what that was going to cost. And then a few months later, September of last year, we were told, well, you could get 3 dressing rooms for that, but not 5. And so we agreed to 3 dressing rooms. Now those 3 dressing rooms are questionable. They don't, I mean, they will have value to the community, but not contingent to grant funding. But why is it that the 3.355756 million that we approved then is only worth 2.8 now? So if we were to, I mean, we added $3.3 million to our budget, but now if we subtract those items, we only save 2.8.
Your worship, that's actually a very interesting question. And part of the answer is because we have some sunk costs. So we did spend money to get us to this point. But the biggest part is if we don't add those dressing rooms, we have to go back to a bunch more renovation that we took out of the project to do those dressing rooms. And so that's why the 3.3 is actually only showing us 2.8, because we know that we have to then make up for the loss of those dressing rooms and the reno that we took out because it wasn't good value for money to put it back in. And that's a good example of why we are asking for the debenture, because we think the best value for this community is to do that full build. It gets us all the way to accessibility, and it gets us all the way to 20 years from now. We still have the ability to do all sorts of mixed gender teams and even with the littles, we have all the space for all those teams to be on the ice at the same time. That is a good example of why we've said our recommendation is put that debenture in.
Thank you. Councillor DeMota.
Well, this whole thing has gone up 20%. You break down whatever it was for the 2.8 million for the projects that are outside of the dressing room. So if you take the dressing rooms out, it was going to cost us 20% at least anyway. And then we've got an economy of scale. The other dressing rooms are going to be $1 million each, I guess. That's how it works out. But that's gone up 20%. So we're at 3.6. If we don't do that, and a few years later, how much more percentage is that going to be on that original $3 million? So I think we're there, we're ripping the building open. It's a tough pill to swallow. We have new information and access to stuff we didn't know about before. That changes the numbers. It's not anybody's fault. It's hard for some community members to swallow. You know, I think it's going to be tough to make these decisions, but we have to make it. And 20% today is probably going to look like 50% tomorrow down the road. Everything's just going to go up. And bringing trades here to Jasper is always going to increase. We saw it when we did the fitness center and fitness and aquatic center edition. We saw it when we did this building. It's just whatever mark we pick, it's always going to be higher, and that's just something we have to live with. So I think down the road we should factor that in. But now we're here where we are, and I'm ready to move forward with this. Thank you.
Councillor Keller.
So on this total price, we have a contingency in there, so we may come in under, am I correct?
After all that, your worship, through the Councillor Keller-Hampy, that is a possibility. I wouldn't put a probability to that, but it is absolutely a possibility, yes.
And my second question is, you're not going to come back in December and tell us you need more money.
Your worship, through the Councillor Keller-Hampy, it is absolutely not my intention to do that. There is certainly the possibility that we start opening up the ground and we find that there used to be a gas station there and there's a contamination issue. That is pretty, again, it's possible, not probable. So at this time, with all the information I have, yes, this is a confident request for the right amount of money that should finish this project because we have tenders in hand. If we don't get to follow up on those tenders, then the whole thing is up in the air. I couldn't say. But right now we have tenders in hand. We believe but not we believe, those are contractual tenders. So yes, this is the number we are asking for.
Thank you for that.
Councillor Wilson.
Yeah, just to follow up on that as well. Like, we touched on it briefly last week, but Carlson Construction, we're paying them a construction management fee. What are the incentives for them to stick to the budget that we're putting out forward right now? What kind of assurances do we have that, you know, that if the project is more expensive, they make more money? So how do we keep that in check?
Your worship, through to Councillor Wilson, there are no penalties in the contracts that we have with Carlson or any of the other consultants on this job. And again, I will mention that in the past, we have seen that just inflates the price initially. So there isn't a giant benefit to putting those kind of penalties in. The only thing that I can tell you is Carlson has worked hard already. This is part of their resume when they're done. So the biggest thing they have to work on is that they said they would do it. And it is, like I said, we have those tenders in hand. So if something were to have been a mistake on their end, that's on them now. But other than that, there isn't you know, we're at the 11th month and they're nowhere near done and we get to penalize them or anything like that. We don't have any of those controls in.
No, I wasn't speaking about penalties. It's
okay.
Really construction management fee is we're paying them a certain percentage on the cost of the project. We brought them on for pre-construction work in thoughts that they would find some savings to the project, which they didn't, because that's not a benefit to them. So yeah, maybe
yeah, no. Your worship, I'll speak to that. Director Reed and I have some conversations about, and bear with me just for a brief second, about costs and the investments in prevention. It can be very difficult to total up the amount of savings that you have from an investment in prevention. And I think it's a bit like that with the construction manager, because we had somebody on our side when we were going to tender who was beating the bushes with sub-trades to try to find people to bid so we would get more than one bid. And they did that in a number of different areas. If we were doing this ourselves and just tendering out individual portions, if we were leaving it to our architect team who are, let's just acknowledge that there's a difference between architects and builders. And so we have a builder who's acting on our behalf, who knows sub-trades and was able to get us what I believe is the best price possible in this current market environment. And I can't demonstrate to you what the price would have been if we didn't have them in place. But I do believe that they have provided value. Certainly they've provided expertise that Director Reed or I wouldn't have had. They have provided the ability to, you know, beat the bushes to try to find people to bid that neither of us would have been able to do. And I believe that value is there. But I can't give you here's the exact amount that they saved us from recommending that we delete this thing. It is prevention in a lot of different ways.
If I may, Your Worship, I can add a little bit of specifics that might help. For example, there were some very long lead time and very expensive air handling units. And Carlson, with the consultants, not just beat the bushes for bids, but they beat the bushes for alternative ways of meeting the same BTUs. And they did bring in a way of heating our building that will be cost less initially and also cost less operationally, because it actually gives us more flexibility. So I can give you probably a dozen examples like that. And I would also add that with the consultant team, especially WSP, who work for us. So there is a check and a balance there in that there is somebody who is not paid by Carlson who is watching this whole thing unfold. So the veracity or the truthfulness of did we beat the bushes is actually verified. And so there is that's partly why, back to Councillor Keller-Hempe, this is a confident number because of the strength of the team that we have, the whole package.
Councillor Demota.
Well, I'm surprised I didn't ask this question before. I have two here, but because you talked about BTUs, Mr. Reed, through you, your worship, I gave up on the heat recovery system that never worked and is still brand new and never been used. Have we been able to repurpose that in this project?
Your worship, through the Councillor Demota, not yet, but we aren't fully at that stage yet. So and one of the great things about construction management is that as the projects unfolds rather, we will see whether or not there's a place to do that. We do have a couple of opportunities that are still in my back pocket that we haven't fully engineered yet. And so we'll be watching for those opportunities. But to answer your question, it's not yet done.
I would just environmentally hate to see that go to waste for just sitting there for maybe 10 years now, maybe 13 being used. Okay, so the main part of my question is we've got some guarantees. We factor in cost overruns. You know, what is that usually for Jasper? 25%. We've got that factored in with the 6.4. All right, so we're comfortable with that. I'm just clarifying things because we're all hesitant, I think, or maybe I can't speak for everybody, but there is a hesitation to move forward just because of once bitten, twice shy. So it's going to have some ramifications socially, primarily financially. Does it benefit the community as a whole? I think so. We've discussed all the costs, and I think it's the right thing to do right now. So I don't think that it's going to stop at 6.4. Unfortunately, I think that we might find when we dig some holes that there's going to be things that we won't found. Hopefully, with the history that we've had with these people so far and helping us circumvent some issues and maybe find some cost savings, that we have a good relationship that way. So when you jump, hopefully the net appears, right? Councillor Waxman. So I'm hoping there's a net down there because I think we need to jump.
I have one question left of administration. Is there any identifiable cost for the log cabin renovations? I don't see it anywhere in this. Is it just negligible? It doesn't get included, or what's the status?
Your worship, administration isn't proposing to do any renovations to the log cabin building as a part of this project.
Okay, well, it's listed in the updated report, and it didn't seem to be listed as we're not doing this. So.
It's in the updated report because that shows the information that is in the federal grant application and federal grant approval. So we're just identifying that was a straight copy and paste from the funding agreement. This is the stuff that we're going to do. We're obviously going to already have to go back to the feds and say we chose not to do that portion of the project because we focused the available dollars on all these other things.
Okay, so we're already getting less than we started with, despite the increase of the 6.4. I mean, if we were to vote for the 6.4, we have already axed whatever we were going to do at the log cabin.
Your worship, I think that is a fair statement across the board in all of the areas. I think there was a time in 2019 when we applied where we thought that getting that federal grant would solve all of our problems for all of those facilities for the next 20 years. And there's still lots to do after this renovation to the Aquatic Center in particular, as Director Reed said. Administration went through and said, well, we know even, a year ago, we need to prioritize because we're not going to get all things done that, that were imagined. And the some of the group 2 information that I've been able to find suggested that in 2017, 2016, that this was doing all of the stuff was a $14 million bill in 2016 dollars. So quite a bit has changed there. And as administration has looked at this all the way along, we say, what are the core functions that we need to do? And council's seen this report. What is the focus on life safety first? What is the focus on accessibility next? Energy efficiency and mechanical improvements next. And then added service comes after that. And so the log cabin is an example of a self-contained project. It can be in its current condition for a couple more years, and that's probably okay. The new addition of change rooms, they're a service enhancement, and they do stand relatively well on their own. And that's why administration said if there was something that council wanted to change, the service enhancement is probably that type of thing. Administration's recommendation is it should actually do the service enhancement, but that's the decision making that's in front of council. Whether that provides enough community value and benefit to make it worthwhile.
Councillor Demota.
A couple more comments on sellability. There's 4 of us on this council that were on the last one that approved the last renovation on the arena. And I think that decision saved tons of money. Unfortunately, we don't have a scale to really show, making a move while we're in the middle of the pandemic. But, you can imagine the cost overruns that if we didn't decide to go and do that, then what it'd be now and, post-pandemic dollars. We took advantage because the arena was already closed down. So then there's the stoppage of even that minuscule revenue, as it's referred to as, a couple of seasons could have had more detriment to the community than it needs now. Now we're able to move forward without foreseeable closure because we made those prior decisions. So I think, that $6.4 million in my mind doesn't really look like $6.4 million for the community because we've already done that savings. We have a hotel with a new wing on it. There's more rooms in the community. We've got a housing operation that's going up on the west end of town there. And we also have one that's going on Connaught Drive. It's not built yet, but there's going to be more units, meaning more permanent residency here in the community. So there are going to be more people here accessing, our facilities. And who knows how many people are going to actually use the arena, but if our population, our core population is going to expand, then I think this is a good decision to make, not only just for residents, but the entities that kind of pay that higher portion of our tax revenue.
Deputy Mayor Waxer.
I was struck last week by something that Mayor Ireland said, and that was, imagine the trepidation of the elected officials who were looking at building the activity center in the first place, and had they not made that decision, it must have seemed like an absolutely enormous decision at the time. Our community would be a very different place. And I think that I would like to go on record that will vote for this because I think it is, like those elected officials faced, an important move for the rest of, for our community and for all of our residents and visitors. So I just wanted to say that. Thank you.
Councillor Demota.
Well, I was ready to move forward with making a motion, but Councillor Wilson, okay, good. I wanted to wait till we were all here. We're all here, and it's a good opportunity. Unless anybody else wants to change something.
We, it seems to me, have entered into debate a few submissions ago. I think questions for administration have been exhausted. Positions are being stated and it is appropriate for a motion. So if you're ready to make a motion.
I move that council approve increasing the recreation renovation project by a total of $6.4 million to be funded by the Metrix.
Thank you for that motion, Councillor. Do you want to speak to the motion first?
I know, as you said, I think we've exhausted as many questions as we need to, unless there's need for further clarification or friendly amendments. I'm open. It's a process that, you know, I really like to build with council on making motions. So.
Right, the motion is on the table and debate. Well, I will speak to the motion. And I will vote in favor of the motion, similar to the comments that Deputy Mayor Blackster referenced that I made a week or so ago. The challenge here is that for some members of the community, they will measure return on investment in a different way. And it is so difficult to measure community benefit as return on investment. We are the only body in town that can invest in municipal facilities. And if we were private business, we could take $20 million and buy a couple of hotels and we would see return on investment. And we won't see the monetary return, but will we receive the return in community benefits, community health, and the things that are in our strategic priorities? And I'm hopeful that we will, although it will be almost impossible to prove it. But like our predecessors who I think probably bit a bullet and passed motions to approve spending on the additions to the activity center, including the curling rink and the activity center, or pardon me, the multi-purpose hall and what is now our administrative center, that cannot happen without elected people being prepared to take a position. And so we are the ones in this position, and as difficult as it is to see an increase of 45%, the realities of the situation are such that if we don't do it now, we simply saddle a future council or a future generation with this same problem. And if we take arrows for it, so be it. And I'm prepared to vote in favor of the motion. No one else?
How's everyone's heart rate right now? I know mine's beating pretty fast.
Okay, I would call a question. All those in favor? Opposed? There is one opposed. That is carried. So thank you, Director Reed. Mr. Gibbon. This is knowledge check. I'm sure you had your fingers in this calculation. So thank you all for the work that you've presented. We're getting late in the day, but we have been at it for a while again. Does anybody need a break before we move on to the final few items, or would you prefer to press on?
I believe in 5:30.
All right, well, on that basis, if we're going to lose a councillor, I will suggest that we continue, but if anyone does need a brief recess, just let me know. We are at agenda item 6.4, hose tower repairs. And Ms. Madonna, is that you again?
Yes, thank you, Your Worship. This item came before Committee of the Whole last week, and the recommendation you see on the council agenda list is that council approved capital funding in the amount of $50,000 for the hose tower repairs project at the Emergency Services Building. Funded from the appropriate reserve was an edit that was provided last week to ensure that we refer to the reserve appropriately. And we are ready to move forward with the project pending approval of funding, and looking forward to making those repairs within this construction season. And I'm happy to answer any questions if required. Thanks.
Are there any questions from councillors? Councillor Melnick.
and I asked how bad the rain was over the last 48 hours.
Mayor Ireland, through to Councillor Melnick, we've upgraded from buckets to kiddie pools.
Councillor Melnick prefers a measurement in gallons per hour.
For the benefit of those, I think over the last, well, yesterday, it may have been 9 gallons an hour. So I know totally what you were going through. Your Worship, if it's appropriate, I would like to make the motion or recommendation that council approve capital funding in the amount of $50,000 for the hose tower repairs project at the Emergency Services Building, funded from the appropriate reserve.
Thank you for the motion, Councillor Melnick. Is there any debate? I will call the question. All those in favor? There are none opposed. That is carried. Thank you for that. Agenda item 6.5, Community and Economic Development Fund application. Is that back to you, Director Reid?
Thank you, Your Worship. Yes, indeed. So again, as Director Nadon mentioned, I'll say the same basic premise here that at last week's committee did recommend that council award $2,500 in community economic development funding to each of the following groups: the Jasper Local Food Society, Jasper Pride Festival Society, Jasper Seniors Housing Society. And I don't really have anything to add or change to that recommendation.
Thank you for that. Any questions, or is your councillor prepared to make a motion? Councillor Keller-Hurrenby.
Thank you, Mayor Ireland. I make a motion that council award $2,500 in community and economic development funding to each of the following groups: Jasper Local Food Society, Jasper Pride Festival Society, Jasper Senior Housing.
Is there any debate on the motion? I will call the question. All those in favor? There are none opposed. That is carried. Agenda item 7, notices of motion, of which there are none. Except, I'm sorry, did I miss one? Oh, I did. 6.6. I am sorry.
6.6, sorry.
Strategic Facility Plan RFP award. Mr. Gibbon.
Your Worship, this is another recommendation from the committee last week. The committee's recommendation is the council increase the total budget for this project to $106,705 using $76,705 in Municipal Sustainability Initiative operational funding, and the council award the strategic facility plan to reimagine architecture. As discussed last week, the special proposals was posted. We received 2 submissions, which were both evaluated. Reimagine Architects is a capable firm that was the highest evaluated submission. The intent of the project is to review the municipality's facilities and future staffing plans in order to provide recommendations to administration and council that will inform future budget cycles and better inform administration's capital project planning. So while this project is over the initial expectation that we brought forward to you in the 2023 budget, we do see it as continuing to be a needed asset that will guide our future project planning and budgeting, as we said, and ultimately not having a plan like this will leave us to be working in a more ad hoc manner and risk not being able to serve residences effectively, and that ad hoc capital planning can tend to be more costly. So administration still recommends that this is a worthwhile project, and the committee recommendation is in your council packet.
Thank you, Mr. Gibbon. Are there any questions of administration? Your councillor prepared to make a motion? Councillor Wilson.
Yeah, I would make the motion that council increase the total budget for the strategic facility plan to $106,705 using $76,705 a municipal sustainability initiative operational funding, and that committee recommend council award the strategic facility plan to Reimagine Architecture.
Is there any debate on that motion? Councillor?
Oh, no,
Nope.
I was gonna vote in favor, so it's just.
Well, then I would call the question. All those in favor? There are none opposed? That is carried.
I do have something to ask,
Go ahead.
if I may, before I go. This is going back to 6.3, and I'm gonna be remiss if I leave today's meeting without asking this question, and it's gonna be directed at Councillor Wilson, and I apologize for putting you on the spot, but I am putting you on the spot for good reason. When the mayor called for debate on my motion, I didn't hear anything from you, and we didn't hear anything from you, and I'm a little confused at the reason why you voted against it based on the questioning that you asked earlier. So if I can ask why you voted against that motion, you don't want to talk about it? No, I understand. Okay, thank you.
Thank you. We will return to the orders of the day. Agenda item 7, notices of motion, of which there are none. Take it there are none to add. So agenda item 8, councillors' reports. Do councillors have reports of activities to share with council today? I won't force anyone. I'm sure there have been people engaged in lemonade day and things like that. Councillor Hall.
Thank you, Mayor Ireland. Last Tuesday evening, I attended a library board meeting, which was actually quite great. We met upstairs, which was nice. And I'm very happy to report that the garden tours are coming back, and that will be on July 22nd. And I'll be sending out information to all of you. There are 6 gardens, and they are a secret. She wouldn't even tell us. The next day, I attended a community conversation for early childhood and youth, and learned that the food bank was actually successfully receiving a grant, and they're able to hire someone to run the food bank for the rest of the year, which is really good news. That job posting's up. I'm not sure where, but it's up. Youth programming is as strong as ever, and Carla's group, I think at elementary school, we're able to take a group to Hinton to the jump park with the help of the fire brigade. So I just wanted to go on record and thank them for paying for the bus. I think that's huge. On Monday, so yesterday, I attended the YRL Yellowhead Regional Library Zoom meeting, which was also very interesting because they were right in the beginning of their process of working on their equity, diversity, inclusion plans. And so it was really interesting to hear conversation around the table at a very beginning stage of that process. But it was a good meeting, and that's all I have to report.
Thank you, Councillor Hall. Deputy Mayor Waxer.
Councillor Demoda and I attended Lemonade Day, and I don't believe I've ever consumed as much sugar in one sitting as I did that one day. It was really it was a very positive experience, and it was really amazing to see the children actively involved in the process. And I think a couple of particular children stood out, but just with their articulate explanations of what they were doing and why they were doing it and what they enjoyed about it, and some as young as 5 or 6. So that was really quite inspirational.
Thank you for that. Additional reports. All right, Councillor or Deputy Mayor Waxer didn't mention it, but a week ago yesterday, we met with Councillor Melnick and staff as part of the Emergency Advisory Committee, at which time we approved the emergency management plan. Is that the plan we approved? An important plan, apparently, one that required approval to meet legislative requirements. So that work was done. We have more plans to review subsequent meetings. And that is it for my report. If there are no other reports from councillors, agenda item 9 is a list of upcoming events, beginning with National Indigenous Peoples Day tomorrow in Robson Park. Wednesday of next week at the Tourism Jasper Visitor Experience Center. And then it is Canada Day and pancake cooking, and presuming still a flag raising and a parade. But I haven't seen a lot of indication. Councillor Hall can fill us all.
I'll speak that very briefly. As I'm on the committee, there will be a parade, there will be a party at Commemoration Park, very similar to last year's events. So make sure you mark that day on your calendar. So it's going to be lots of fun.
Councillor Melnick.
Thank you. Thank you, Your Worship. If I may, I'd like to add one more event so that we are reminded of it, but that'll take place at the end of August. It's the Jasper Yellowhead Historical Society homecoming event, specifically planned for 3 days, the Sunday, Monday, Tuesday, August 27th to 28th. There are 2 events which are included in the purchase price of the ticket of $100, and that is a welcome reception where you have a chance to meet and greet and see people who are coming in from out of town who date back about 50 years, 40 years ago being in town, among others that are in attendance, as well as a dinner on the Monday night at the Jasper Activity Center. So it should be a good event to bring in people. That numbers are starting to climb, and hopefully it'll be a sold out event on the Monday night before the dinner.
Thank you, Councillor Melnick. If there are no other items to add to the list of upcoming events, I would entertain a motion to adjourn. I'll give that to Councillor Kelleher at the fraction of a second. All those in favor? We are adjourned.
5 minutes is
Thank you all. It was a bit of an arduous day, so I thank the people who lasted through the Zoom session, if any did. I've told that they did, so we really do appreciate the interest in our proceedings, and look forward to seeing you again a week from now for a committee of the whole. Thank you all. We are done.